All right, all right, all right. How are you guys doing today? Happy Thanksgiving. Happy Thanksgiving. Uh-oh. Happy Thanksgiving and welcome to Ask the Trader Thanksgiving version. All right, so we're just going to wait for a couple of more people to join. I also want to make sure that my comments is working. So if someone could comment and if someone can let me know if you can hear me clearly, I will go ahead and start. And if there's any stocks that you want me to analyze, please put it in the comment section. All right, one stock with $1 billion market cap. All right, one stock with $1 billion market cap. All right, someone said that it's clear, so I'm going to go ahead and start. So, welcome to Ask the Trader. I'm your host today, Joel Harrison, and I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 15 years and over 30,000 hours of experience. I need to change this slide. And all the opinions that we talk about today are the opinions. Anything that we talk about today are the opinions, the opinions, the opinions, the opinions of Joel Harrison. All right. So I want you to do your due diligence. Don't buy something just because we talk about it today. I'm teaching you guys how to do it yourself. All right. But I am a full-time day trader. I swing trade, day trade, invest. So any questions that you guys have today, if you do provide a stock for me and you want it to be for a day trade or for a 10-day trade, I want you to specify that in the comment section. Otherwise, I'm going to assume that it's an investment. So when you come to Ask the Trader, I want you guys to kind of put three hats on. There are three types of people that are going to be here: day traders, swing traders, and investors. So we all are going to look at the market three different ways. So I want to make sure that when I'm looking at your stock, that I'm covering the time frame that you're looking for. All right, we're going to go for 2 hours today, maybe even a little bit longer, because my tea time isn't until about 2 o'clock. All right, so I'm going to try to get to everybody's stock today. But if you have not used it yet, I want you guys to go to my Ask Joel GPT. It's the best GPT that's out there because it has my special indicators that I included in it. So if you do have a GPT, just go to Ask Joel GPT, add that to your other GPTs, and anytime you have a stock question, ask Joel GPT, and it will provide you the information that you need for that particular stock. And it's up to date and it pulls all the information. So if you haven't been using AI and been using the GPTs, you guys need to get on it. If you have not downloaded my app, it is free. You can go to the Google Play Store or the App Store, and you can download the What Would Joe Do app. Ultimate members that are on the map, you will get alerts for when I'm buying and selling things. I'm going to show you guys a couple of stocks that I bought in the past that I put out alerts in the Ultimate membership alert system, and a lot of people were able to buy stocks when I bought stocks as investments and swing trades. Haven't really been day trading that much lately, but I have been swing trading. So those 10-day trades or those 3 months, 4 months trades, you could have made some pretty decent money just by using the app. You also will have access to all the videos that I have. So if you're confused on what stocks are or options or futures or cryptocurrency, if you subscribe to the app, you're going to get access to those videos. All right. I'm going to show you guys charts today, and my charts are probably the most beautiful charts that are out there. All right. If you want your charts to look just as beautiful as mine, you can download this particular, you can buy this particular video that I created. It is my #1 product. You can go to payhip.com/whatwouldjoe do so that you can follow along with me when I'm showing my different videos. All right. If you need to book a consultation with me, you shouldn't be suffering in silence. Go to calendly.com/whatwouldjoe do. I know you guys been telling me to get on this forever, and I finally did it like 4 years later. All right, so you can book it on your own if there is an availability there. Go ahead and try to book in advance because they will go pretty quickly. All right, it's only 45-minute sessions, $50, right? How often can you talk to an actual day trader, intraday trader, and you can ask me any question you want? A lot of people use these sessions as learning sessions, so why go take an options or forex class or crypto class or futures class when you can come to me and learn it for $50 or $100 in an hour? You guys are spending $10,000 and you guys can literally talk to me and learn from the horse's mouth. I don't understand it. You guys just love spending money. I don't get it. The cheapest this out there, I put this out there for you so that you guys can get advanced, because I'm trying to build a room of educated traders and investors so that we can all make money. I can't look at every single stock that's out there, but if I can educate you and show you how I see the market, and you post something in there, there's lots of I've done over thousands of consultations over the last 4 years. So I'm trying to produce a room of, like I said, educated traders, and we are some of the most educated traders and some of the best traders that I've seen ever. Thanks to these consultations, and I learn from you guys too. There are a couple of places that you can go to look for a lot of my free publication. You can go into the Insider Trading Room. This is being broadcasted over Facebook, over Instagram, over YouTube. All right. Soon it will be over LinkedIn. All right. But these are a couple of places that you can go to. Go to What Would Joe Do? All you got to do is type What Would Joe Do on any of these social platforms, and you'll find me. If you are on Facebook, where I spend most of my time, you can go to the Insider Trading Room. There's over 30,000 members in there. And if you have bought a product from me, you will get access to the Ninja Trading Room. All right, so let's start. Whew, now that I got that out the way. Investing and trading is easy. You make it hard. Investing and trading, guys, is easy. Y'all make it hard. I mean, it's the easiest thing I think I've ever come in contact with. And I'm a hoe. I'm a hoe when it comes to businesses and making money. I've done it all. All right. I've done it all. But investing and trading is the easiest way to make money. Y'all make it hard because I gotta be honest. A lot of the educators that are out there, a lot of the teachers, a lot of the stuff that you guys are reading on YouTube, they don't understand how to invest and trade. It's actually really, really easy. All right. Getting stock tips might be hard, right? Trying to find those particular stocks that we want to buy. But then once you get that stock tip, trading it is the easiest thing, especially if you're using the What Would Joe Do method. And you go through that process of understanding how to take that stock tip. And that's what I try to teach to you guys, because a lot of you guys are on information overload. The more you know does not make you money in the stock market. I'm sorry to tell you this. It's great to have a fundamentally good company like an Apple, a Microsoft, a Google, or an Nvidia or Bitcoin. But those stocks go down just like they go up. It's great knowing that in the future, some of these companies can be worth, trillions of dollars. But getting in and out is what you guys need to start learning. If you guys are not using the technicals, if you're not merging the technicals with the fundamentals, that's why you can't make money. I love having a powwow with all of you guys talking about different stocks. That's why we're here today. We're going to talk about a lot of stocks. I love that. But then once you take that stock, how do you know when the momentum is there if you don't have access to the information that I'm going to show you today? All right. And this stuff is free. I'm not charging you guys anything for these sessions today. All right. This is free. All right. But you guys are on information overload. So I am thankful. I am thankful that I spent the time over the last decade to create the What Would Joe Do method of investing and trading. The What Would Joe Do method of investing and trading is not to glorify me. It is so that you can go through a checklist and know why you're buying something. Is this stock bullish or bearish? Is the momentum there? Is the momentum not there? I see so many of you guys buying stocks that are bearish, trying to wait for it to go up in like 2 or 3 weeks. Like, that makes no sense. All right. So my job is to kind of get you guys to kind of see the market for what it is. And use my method, use your own method, call your own method your method. But I want to try to create a foundation so that you guys can go through your checklist, right? And I want you guys to start keeping it super simple. The more that you have on your charts, if you have 3, 4, 5 different indicators, I've seen a lot of you guys post stuff in the room. If I post a chart in the room, 95% of you guys should be able to look at that chart and decipher what it is within 10 to 15 seconds. I see a lot of you guys post stuff, and there's so much stuff on your chart. I'm like, how do you make money? Probably by luck, because there's a 50% chance you're going to make money to the upside or downside, right? So you think all of that information is going to work. Or what a lot of you guys are doing is you're taking so many classes and you're spending so much money, you feel like, oh my God, even though this teacher was terrible and this strategy doesn't work, I spent all this money, so I have to put it to work. No, throw that crap down the drain. If you've taken a class, that's the first step in improving yourself. Okay. But you don't have to use that crap. Okay. They're just training wheels, right? I want you guys to keep it super simple. The less you have on your charts, the easier it is to see the moves. All right. We're going to cut out all of that junk, all those YouTube videos. We're going to go to our history and hit delete. We're going to start fresh, clean charts. All right. And that's what we're going to look at today. Watch how quickly I'm going to be able to analyze you guys' stocks today within 10 to 15 seconds. And so many of you guys think that it's just magic. Oh my God, Joel just have all this knowledge. No, it's not. It's because I'm using less and you guys are using more. And you guys continue to do this, right? So we want to keep it super simple by going through what we learned in grade school. When we ever wanted to answer a question, or if we ever wanted to know something, we went through the what, the whens, the where, the whys, and the hows. When you guys come to me for a consultation, a lot of the times you guys can only answer 2 of these. And you guys are educated, doctorates, masters in business, lawyers, doctors. I get it. You're smart. You're intelligent. You have the capacity. You have the intelligence to be able to understand it, but you're going about it the wrong way. All right. So everybody knows I use 4 time frames for everything. You should be using, in my opinion, 1 chart for whatever style of trading you're doing. If you're doing intraday trading and you're getting in and out the same day, there's no reason for you to be flipping back and forth between 20 charts. Well, the week chart says this, and the month chart says that, and the day chart says this, and then the 5-minute chart's here, and the 1-minute chart. Think about this, guys. When you have a lock on when you have a combination lock, why isn't there 2 numbers? Because everybody can figure it out, right? The more numbers you add, the harder it is to unlock that combination. The more indicators you guys use, the harder it is to take a trade. That's why you guys get paralysis of analysis, because every single time you add an indicator, you just increase the combinations it take in order for you to get in. The less combinations you use, the easier it is to take a trade. That's why if you have 1 chart, it's easy to make a decision. When you have 3 charts, all 3 charts have to be in order. That's why you guys can't make, or that's why you guys miss trades. That's why you guys are confused. Well, this chart is up and this chart is down. So which way do I go? Well, I got to wait for all of the charts to go up. Well, how often do all the charts go in the same direction? 1 out of 37 days? And this is what I see a lot of teachers out there teaching, because I get it. You guys don't understand how to find that bias. All right. But I want you guys to start using 1 chart. I use the 5-minute chart for intraday trading. If I want to trade 7 to 10 days, I might trade an hour chart, maybe even a day chart. A day chart is where I'm going to take my swing trades And my week chart is going to be my investing. I can do everything that I need to do with 4 charts. And I want you guys to start doing the same thing. But we're going to talk about what stocks that I've been thankful for this year using the What Would Joel Do method. All right. I was thankful for being in this business for a long time. And then I'm also thankful for creating a method that allows me and my family to be able to know when to buy things and when to get out of things. Right. And I showed you guys earlier my profits for the year so far. I'm up like 40% across all of my asset classes. And remember, I'm trading hundreds of thousands of dollars. I'm not trading $500 or $1,000. I'm trading hundreds of thousands of dollars. And over all of those assets that I have, I'm up 40%, right? I think the S&P is up 30%. But the reason why I do way better than a lot of you guys that are trading is because you guys don't follow this law that the trend is your friend until it ends. The trend is your friend until it ends. Guys, you got to ride trends out. I see so many of you guys that will think about this. How many of you guys have been in a trade and wanted to get out of that trade in 15 or 20 minutes? But then you ended up losing. So then you ended up being in that trade for a year. You guys are doing the opposite. I want you guys to sit in trades for a year that are profiting. And the trades that you're losing on, I want you to get out of. I don't want you to be allergic to. I don't want you to be allergic to losing. Because once you get allergic to losing, and I don't like how this feels, sell it. I want you guys to spend more time profiting and less time losing. You guys are doing the opposite. Well, Joel, you only lose when you hit the sell button, right? No, you're losing the whole time. And I'm here to tell you, you are. Stop sitting and losing trades for years. All right. Well, it's going to come around someday, right, Joel? I've been reading up on it, and I actually work for the company, and they're fundamentally good. Ford went down for 20 years. 20 years, guys. Ford went down for 20 years. You would think that a company that was going down in price for 20 years would stop selling cars or go bankrupt. No. Just because you have a fundamentally good company doesn't mean that the stock is going to go up in price. And that's where a lot of you guys go wrong. Y'all think that the stock market and what the company does is the same thing, and it's not. They're separated. And once you start to understand that, you'll be able to see it in the charts. But you want to stick with the trend. You want to stick with the trend as long as you possibly can. Now, here's my receipts. All right. I don't get, I used to feel so sorry for people that came in the room and they felt so bad when I posted receipts. I don't care no more. I don't care about your feelings. I really don't. If you feel some type of way by looking at somebody's receipts, something is wrong with you. It is. All right. Because if I show a receipt because of a process that I went through, a 10-year process that I can continue to do, and I can continue to show you guys how it works. I'm not going to have you guys scare me out of the room or scare me from showing receipts anymore because you feel insecure about how you trade or what's going on in your life. I just don't care anymore. All right. Because I have a lot of family members and a lot of friends that depend on me to show these different things so that they know that they're still on the right path. And I'll say this, the people that aren't showing their receipts or have a problem with receipts are probably the ones that can't produce receipts. All right. Because if you feel some type of way about it, why is that? Probably because you can't do it. Right. And you don't want me to shine. All right, but I'm up 40% for the year. I'm beating the S&P 500 and the NASDAQ, and I trade over 30 stocks at a time. All right, so if I can do it, you can do it. And yes, I put a lot of work into this. I put a lot of work into, investing and trading, but you guys can do it too. And there's nothing wrong with receipts if you can back up those receipts with information. What I don't like is when people just come in the room and just post something that they're doing. Or just, hey, look at what I did today. Okay, well, How did you do that? And why didn't you tell the room to buy it, right? When I post a receipt, it's about a stock that I told somebody that I was buying, probably my ultimate members, and I'm showing you guys what it's doing at this particular time. There's a process. All right. So there's a lot of I work probably the most in managing the insider trading room. Every single day I go through and I see the 20 posts that people want to post every day. 18 of those posts are just receipts that I ain't gonna let go through the room unless it has information behind it, like why did you buy it? Where do you want to get out? What was the goal? All right. Otherwise, y'all just gonna continue seeing my receipts because I'm about educating and then showing the receipts. All right. Educating and then showing the receipts. 1 year ago, at this particular time, I created a video just like this. And I showed you guys right after October, the volatility index, guys, is above 20 or 30. We're still in year one, going in year two of the 4-year bull run. This is when you guys need to buy. Some people believed it, some people haven't. Some people are just coming on board and starting to realize that this Joel kind of knows what he's talking about. All right. So receipts are very, very important in life. In life, if you decide that you want to flip a property, please stop learning how to flip a property from your parents who only owned one property. Talk to a home flipper. Talk to a realtor that's in the area, right? Whatever business that you guys want to go into, educate yourself with somebody who's done it. There's so many fakes out here who are out here saying that they've done this and they're just making money off of you so that they can do it. And there's nothing wrong with that. Just be transparent about it. Hey, when I first, my first client in real estate, I was like, yo, you my first client in real estate. You're my first client. I'm going to treat you like you're the world, but you're my first. And they understood that. They could have fired me if they wanted to. And then from that client, they referred me to 3 or 4 other people. And then from there, I was able to sell hundreds of homes to people. Same thing in this market. All right. Receipts are very important. But let's get into the education part, right? Volatility index. Second most important thing in life. I'm not going to spend a lot of time talking about the volatility index today, but the volatility index is where a lot of you guys that are investors and maybe short-term traders, this should be the second most important thing in life to you. The 200-day moving average should be number one because it's the universal indicator to let everybody on the planet knows if a stock is bullish or bearish. The volatility index is the Richter scale, like an earthquake. It's going to tell us how bad selling is or if people are over exuberant when they're buying. The lower the volatility, think of the volatility like an ocean. The higher the waves in the ocean, right? That's when it's turbulent out there. But a lot of the times we don't know. Like if a surfer was to go out and surf, there's probably a ranking on how big the waves are. Are the waves at an 8 today or a 9 or a 10? Even surfers will say, hey, at 8 or higher, we can't surf those waves. I'll die. Right? Or if the waves are just a 1 or a 2, the waves aren't big enough to get on, right? So the volatility index is important, but I want you guys to look at 2 values. Last year when the volatility index spiked above 20 on October the 23rd, 2023, the volatility index popped above 23. These are the 3 values that you guys need to look at. The volatility index is called the VIX. You can type it in Yahoo Finance or on your platform. Right now, it's at a 14. That means the waves are just normal. That means this is normal trading. When the volatility index gets above 20, the waves are really big. That's when you guys should be investing. That's when you guys should be buying some of those stocks that are probably down, because when the volatility index goes up, the stock market goes down. So when the volatility index gets to 20, that means there's a lot of selling happening. Okay. And guys, selling don't happen for like years. Like, because think about it. Once everybody sells, then everything is sold. I don't know why you guys think that when the market sells off, it's going to sell off for 3, 4, 5, 6, 7 years. All right. When the market does sell off, a bear market on average lasts 344 days. We talked about that in the last video. 2022 was a bear market. Everybody and their mama should have known that the next 3, 4 years were going to be positive years. But if you haven't talked to an investor or trader like myself, you wouldn't have known that. And then you missed out on it. All right. But 20 is when you nibble. 30 is when you start to really, really buy stocks. 50 is when you load the boat. Okay. 50 is when you load the boat. 50 is when you call your mama and be like, yo, all my money is invested, but I have an investment of a lifetime. That's when you make those calls. But a lot of you guys don't know when that period is because you don't use charts and you're not literally looking at the second most important index on the planet. All right. So we're going to look at 2 dates, October the 23rd of last year. And we're going to look at August 5th of this year. Why August 5th this year? Because the volatility index spiked above 50. Remember when I said load the boat? It did it for 1 day, August the 5th. All right. So what was I thankful for? Well, look at Nvidia. All right. I know a lot of you guys are looking at this on your phone. So I wanted to make sure that this 1,377% from last year during this time. I want you guys to see that with your own eyes. That's right. If I had $10,000 invested in Nvidia, it would be worth $137,000 1 year later. In a stock that I've been telling you guys to buy since 2016. In a stock that whether you hate Biden or not, they created an infrastructure bill. And one of the largest pieces of the infrastructure bill was going into the semiconductor space that I talked about in every single solitary video. I capitalized. I told everybody else to capitalize. My son been talking about Nvidia since 2016. But y'all are all in these other rooms and Reddit and trying to trade GameStop and trying to make this fast money off of one company when this is actually a real company that's doing real things that's changing the world. Well, this is a real percent. This is a real statistic. I'm up 2,500%. Why? Because I've been investing in Nvidia since 2016, adding to my position, right? But you could have gotten in on October the 23rd when the VIX popped above 20 last year when I did the October video. And a $10,000 investment would be worth $137,000 today. And I don't care how much money you have, $137,000, a lot of us could have used. Even if you had $100, okay, it would be worth $1,300. Okay. You had $1,000, it'll be worth $13,000. All right. You had $10, it'll be worth $137. I don't care what amount of money you had in Nvidia, you still would have got a 1,377% return, which helped me grow all of, because I'm not going to have all my money, all my eggs in one basket, right? I'm just not going to do it. I'm going to do it slow. We built our wealth in my family slowly. And now I have the capital where I can throw $10,000 or $100,000 at something so that I can make these sizable gains. Okay. I don't have to throw everything at one stock. And then if I lose it all, then I got to start all over. Sometimes it takes you guys 5, 6, 7, 8, 9 years to accumulate 10 grand. So I get it. You still should be diversified. But I promise you, in time, the amount of money that you used to want to throw at stocks, you're going to have access to those funds. You got to start off a little slow at first. But slow does not mean putting your money in indexes. I can't stand when I see people under 60 years old talking about they buying the S&P or buying these indexes that are only going up 8 or 10% when you got a stock like this going up 1,300 and you're fine with that. I'm trying to get rich, right? I'm trying to get wealthy. I'm trying to hit singles and home runs, and you guys should be doing it too. And if you talk to some of the best investors that are out there, Warren Buffett, Kramer, myself, we're not we do say yes, your first $10,000 you might want to put it in something like the S&P 500 fund, but you still should be on the side taking 10% of your assets and trying to hit home runs while your wealth is accumulating. All right. I love the S&P 500 because it can't go to zero, but it's not going to make you wealthy unless you're throwing $1,000 at it every month. And everybody that's on this call today don't have that type of capital. And then it would have taken you 17 years to do it, where maybe you can take a shot at a couple of these while you're still building your foundation. All right. But that's why I have consultations, so you guys can come to me so that we can talk about it. Palantir. Can't say that I wasn't telling you guys to buy Palantir. You guys can go into the room right now and you can type Palantir Joel, and it will pull up every search that or every article or every post that I made about Palantir in the Insider Trading Room. And what you guys are going to notice is that I've been talking about Palantir for a minute. Now check this out. If you had bought Palantir back in October, y'all see how much I'm up? 200% return. Y'all see what my average cost basis is? $21. This is what I call practicing what I preach. This is $21, guys, right here. On August the 5th, I didn't get in on October the 23rd. On August the 5th, when the VIX went over 50, I decided, woo, I got a couple of $100,000 on the sidelines that I can put to use while my other money is still making money for me. Why don't I throw some money at Palantir? All right. And as you can see, I'm up 200% return from August the 5th. It's what? September, October, November, 3 months. How did I know it was going to go up? I didn't. Right? Why did I pick a company like Palantir? Because if everybody's talking about AI and AI is supposed to change the world, and Palantir is involved with AI and they have government contracts, and then the volatility index goes above 50, I got to buy something that day. And guess what, guys? That was the low. Y'all see this? The market went up. It went down. That was the low. August the 5th was the low, the day that I bought it. Y'all want to learn how to buy the low? I give y'all how to buy the low for free. And y'all still don't use it. I don't understand why. I show receipts. I have charts where you can go back and back test, but you guys refuse to make money. And that's why 10% of the world owns 90% of it. Because investing and trading is dumb easy. Y'all think that studying and having these study groups all the time is what makes you money in this market. And it's not. It's aligning yourself with people that see the market for what it is, all the froth that's out there, and knowing when to pull the trigger and pull the trigger. I don't care what price you bought it that day. You could have bought it at $30 or $20. I know some of you guys that are so exact that are like, it's got to be this particular price because it has to break resistance and it has to break it by one tick and then it has to pull back and then it has to go back up again. I'm like, just buy it. Who cares if I could have bought it at $40 and still would have been up 100%. Like, you guys are getting too anyway, keep it super simple. All right, Palantir. Shake Shack. Every time I go to the airport, what do? I post a picture of Shake Shack. I'm like, I'm checking on all of my companies that's making me money like I'm a mob boss. Right? Shake Shack. Shake Shack. You don't have to like Shake Shack. I love Shake Shack. I love their I think it's called a chicken shack. I love their crinkled fries. They serve alcohol too, even though I don't drink anymore. It's an up and coming restaurant chain. If you want to make money in something like a Shake Shack, why am I buying it? I'm not buying it because of the grade of the food. I see so many people that are, Joel, this isn't the best food in the world, so I'm gonna stick to companies that produce the best food that's out there. And I'm like, that makes no sense whatsoever. How many Shake Shacks have y'all seen in your neighborhood? I live, I mean, I'm not trying to be racist, but I live in a black area and Shake Shack should be around here. You got Burger King and McDonald's and Wendy's and Wingstop. I ain't seen a Shake Shack. So I'm going to keep investing in this company until I see a Shake Shack being built in my community. That's literally my investment thesis. Until I see a Shake Shack within every 15 or 20 miles, this company is going to continue to grow in value. I've been talking about Shake Shack probably for about 2 or 3 years. On August the 5th, you could have said, you know what, Joel's always talking about Shake Shack, but I ain't buying Shake Shack until the VIX gets above 20 or 30. Well, that day happened on August the 5th. On August the 5th, guys, or all the way back here when the VIX got above 20, Shake Shack would have made you over 150% return in less than a year. And you could have bought it here for $80. And what price are we at now? 130? And you'll be up 50%. Imagine being up 50% in 3 months. Think about that. A lot of you guys have enough capital and assets where you could be flipping stock just like you flip real estate. Like, why go flip real estate when I can flip stock? I could take why go buy a $90,000 house and go through the whole process of renovating it and flipping it when I could have used $90,000 here and then I could have made 30,000 off of that 90. I just made a 33, 40% return off of my asset. All right. Doesn't mean that you shouldn't be doing it. I flip property and I flip stock. But it's just the analogy that I want you guys to think about. And the more that I'm flipping stock, the more and more I'm not going to be flipping real estate, because real estate is a headache. But it has to be something that you add to your portfolio if you want to be diversified. I get it. All right. But it's the same concept. It's the same amount of money. Even though it's $90 a share, put 90,000 in it. All right. And if you're doing the right thing and you're throwing a whole bunch of money at it when the VIX gets above 50, you're basically you're playing the correct investment game at buying low and selling high. You always want to buy low when everybody is selling everything. When the VIX is above 50, guys, it only happened this time, and then it happened in 2020. And then before that, it happened in 2008. So 2008, 2020, and then now, 4 years later, you saw the VIX pop above 50. You probably are not going to see it again for another 3-4 years. So when you do see it happen, you guys got to take advantage like I did with Bitcoin. Now, here's where I'm mad, right? I know this one's a little bit different because I wanted you guys to see this $40,000 that I'm up on Bitcoin. A lot of you guys are like, Joel, how are you able to buy Bitcoin in stock? Guys, I talk about this a lot in the room. The country, the United States, have created indexes and ETFs to back Bitcoin. That alone made Bitcoin legitimate. So no matter what you say about its use case and what you can use Bitcoin for, the minute we decided to create exchange traded funds that are backed by Bitcoin, and now your pension funds and mutual funds are throwing money into Bitcoin, that should have shut down any argument about about the legitimacy of Bitcoin. Well, one of the ETFs that you can buy is BTCO. Now, the reason why I love BTCO is because you see this $90 that's here. If BTCO is $90, that means that Bitcoin is at 90,000. So now you can take part in owning Bitcoin as well. So when the volatility index on August the 5th hit 50, yes, guys, it didn't matter if I was buying a restaurant stock. It didn't matter if I was buying an AI stock. It didn't matter if I was buying a crypto. Remember, all of these are more similar to each other than what you think. All right. The companies, the fundamental basis of the company is different, but stocks all act the same. And that's why trading and investing is easy. Well, when the volatility index jumped above 50, I'm going to tell you guys where I was on that day. On that day, I was moving my son into college at Florida Memorial. I'll never forget it. I was moving him, and then I got an alert on my phone that said the volatility index just popped above 50. And I remember I was carrying a couch with my son. We get into the room. I'm all tired. I look at my phone and I saw volatility index above 50. And we were pressed for time that day. And I said, and Zenga, my wife, and Zaire, I said, I'm sorry to do this. And I know this is all about you, son, but your dad needs about 15 minutes to go to his car, pull out his computer, because I need to buy something today, because the philosophy behind the what would Joe do method is that when the volatility index goes above 50, you need to stop what you're doing and go buy something. Fortunately, I had a couple of $100,000 on the side. So I bought at the time when the volatility index hit 50 on August the 5th, Bitcoin dropped to 49,900. I bought 2 coins that day for 100 grand. Well, for 98 or $99,000, right? And I was fine with that. And I had the intention of holding both coins until it hit $1 million a coin. So this could say $80,000 right now. And I'm kind of pissed that it doesn't. But the scary side of Joel said, well, I have 2 shares. Well, I have 2 coins. I guess it was like 2,000 shares. I have 2,000 shares. So what I can do is I can hold 1,000 shares forever, or when it hits $1 million. But just in case I think something's about to happen, I can always sell one and I'm still good. See, the scary side of Joel lost money for us. But the smart side of Joel that used the what would Joel do method says, you should never buy one of anything. You should always buy at least 2, so that in these types of situations, it's always a win-win, because if it goes up in value, I'm still going to profit. If it goes down in value and I get scared, I can sell half of my shares and I'm only going to lose halfway down instead of the full, 2,000 shares. Well, in this particular case, I lost and won at the same time, because I could have been up another 40 grand. But instead, I'm only up 40 grand with 1,000 shares. Moral of the story is when the volatility index hit 50, that should have gave me enough confidence to stick with that particular trade. Because as you can see, y'all see this, when I bought it for 49, we popped in price to about 60. And then we started to go back down in price. And I had a stop sitting down here at about $54,000. So one of my 1,000 of my shares, I made, about 5 grand. And then another 1,000 of my shares, I made 40 grand. All right. But I still did it on August the 5th. You guys saw 4 stocks, 4 different types of companies that all perform similarly, going up in value just by watching the volatility index. Very, very important. All right, cool. So let's get to some of you guys' stocks. All right, so let's get to AskTheTrader. All right, but I wanted to show you guys, what I was thankful for, what was in my account that helped me get that 40% and outperform the S&P 500, and how was I able to outperform that S&P 500 and NASDAQ, because I know a lot of you guys don't see it often. There is a real stat out there that says, I think 70 or 80% of money managers don't beat the S&P 500 or the NASDAQ. And I'm one of few that every single solitary year, at the end of the year, I always show you guys as my, what percent I'm up for the year. And I've been beating the S&P 500s, but for over a decade. All right. So that's what you guys get with me as a leader in this particular movement of learning how to trade and invest not only smarter, but easier, and keeping it super simple. So we're going to get to Ask the Trader. I see a lot of you guys' stocks that are over here in the comment section. I'm going to try to get to everybody's stock today. I really am. I'm going to try to get to every single solitary stock that we see. All right. But I want you guys to look at this chart, and I want you guys to get mad, because down here is where I started. This is where I started back in 2008, 2009 is when I started to learn the stock market. 2007, 2008. I was really, really big in real estate. The real estate market crashed. I knew nothing about the stock market. All I knew was that I didn't have any clients anymore, and I had to figure out a way to generate income. So I had to learn the hard way. First year, I believe I lost maybe 100 grand. I lost $50,000 twice on doing dumb stuff, $50,000 in options. All right. One of the very first classes I ever learned was options way back in 2007, 2008. All right. But now I've, like I said, created a method that I want you guys to kind of use to go through that process of knowing how to buy things. And I want you guys to start keeping it super simple. But these are real stats that you guys need to really, really look at. The average bear market only lasts about 344 days. So when you guys see that a market is down, if it's down for about a year, I know it feels like the world is coming to an end, but the market is rigged to go up. The market is rigged to go up. All of that money that governments spend, that money finds its way into the market because it's businesses, and businesses have stock, right? So if you hear about an inflation bill, or I'm sorry, it actually was an inflation bill, but an infrastructure bill, you know that's money flowing into the market. If you hear about Trump talking about money going into different sectors, we guys got to have that on our radar. We might not see it year one. We didn't see it year one or year two under Biden. It didn't really take effect until year 3 and year 4. All right, year 3 and year 4 is usually when a president's, if you go back in history, because I am a historian, and you look at a president's term, usually year 3 and year 4 is when they do the best. Year 3 is usually the best, right? And then year 4 is a follow-up for year 3, and they want to make sure that the economy is as high as it possibly is when they leave office. All right, very, 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 very important. An average bull market lasts 1 year. An average bear market lasts 1 year. An average bull market lasts 4 years. All right, cool. So let's go ahead and go through you guys' questions and concerns before we look at some of you guys' stocks. L Light says, what it do? I need to put on my glasses. Jeanette says, hi, Joel. What's going on? Happy to see you guys. Nick said, good morning, Joel. Happy Thanksgiving. Happy Thanksgiving to everyone that's on this particular call. Even if you don't believe in it, happy Thanksgiving anyway. Mina says, future millionaires. What's going on? Anybody that's in this room, you guys are future millionaires. Making $1 million should be something that a lot of you guys aspire to. $1 million isn't that, like, $1 million back in the day used to be like $1 billion. So for me to say that I want to be a billionaire is a task that might not happen. But for me to say that I'm already a millionaire, but for you guys to say that I want to be a millionaire, it is attainable, and you're able to attain it very, very quickly. All right, in this particular environment, especially if you're involved in the stock market, options, futures, and crypto. All right, so I want you guys to really, really take advantage of it. Okay. Nick Campus gave me the thumbs up. I guess that was about being for everything being clear. I'm just going down the line. LaRon said, happy Thanksgiving, bro. Happy Thanksgiving to you and your family as well. Hope said, happy Thanksgiving, and y'all definitely can hear me. All right, our first stock. DKL Weddings Photography says, let's look at Coin. All right, so let's go ahead and look at Coin. So Coin is Coinbase, guys. So Coinbase has been doing extremely well. And very first thing we're going to look at is when we look at a stock, guys, what's the first thing we want to know? Is this stock bullish or bearish? Well, we know that just by looking at the 200-day moving average. The 200-day moving average is angled up, right? But are we going to buy Coinbase right there? No, but we do have an eye on it. Just because a stock is up does not mean we should be buying it. Now, everybody knows about my 10-day strategy, 10-day trends. Did y'all know that all stocks on average trend up or down for 10 days? A lot of you guys didn't know this. When a stock goes up in value, it's not day one. I'm sorry, it is day one. When a stock goes up in value, it doesn't just go up for one day. A lot of you guys think, oh my God, I saw that the stock jumped. I missed it, Joe. Stocks do not go up for one day and they don't go down for one day. Usually they go up for 10 days. You start hearing about it on TV, then you buy it because you don't use technicals, and then it reverses on the 10th day. That's why you lose money. Or a stock goes down in price and you think that think about it. If I had billions of dollars, I can't, and I wanted to get out of all of my shares. Y'all, I'm trying to tell you this. You can't just get out of a stock if you got billions of dollars in one day. It usually takes about a week to get your $10 billion out of a particular company. And a lot of you guys think that it just happens in the snap of a finger, like I'm Thanos or something. It doesn't happen like that. That's why stocks will trend for 10 days. Sometimes a stock is trending up in price because the company that you see is buying their own shares. And it takes 10 days for them to get all of their money into their own company. So what I want you guys to start thinking about is 10 days, 10 days, 10 days, 10 days, 10 days. When I'm swing trading, when I first start swing trading, 10-day trends is what I'm looking for. But you guys got to know what day you're in on your trend. All right, so if we were looking at Coinbase, this is a 200-day moving average is angled up. That means this is a bullish stock. Am I going to short this or go long? I don't know what direction this is going. Yeah, we got to, we can draw here and show triangles, but we don't know if this is going up, if we don't know if this is going down. I want y'all to stop doing that and let the market tell you what direction it's going in by using 10-day trends. What day trend are we in? Well, you're not going to know that unless you're using the 5-13 moving, the 5 and the 13 moving average, which is literally the oldest trading strategy in the book. Now watch this, guys. Y'all going to think this is freaking magic, and it ain't. I know I'm brilliant and I know I'm smart, but this is not magic, right? 513 crossed right here. We knew that we had a bullish stock. How long did I tell y'all a stock average is going up? About 10 days, right? This is day 1, day 2, 3, 4, 5, 6, 7, 8, 9, 10. What do y'all think happened after day 10? Stock started to go down. You might be surprised that it's going down in price, but I'm not, because I've been teaching 10-day trends for 10 years. You're just now hearing about it today because you haven't been talking to people that actually know how to trade the market. You might talk to people that understand what a stock does, but it's rare that you meet traders that actually trade the market and actually profit off the market. It's only 1% of us that know how to do this. That's why this stuff sounds foreign to you. All right. And there's nothing wrong with changing your views or implementing what you see here into whatever you're doing. All right. But I want you guys to keep it simple. We got a bullish stock. The 513 tells us that the trend is up. Well, the 513 just crossed to the downside. So it's probably going to be a 5 or 10-day trend to the downside. I'm sorry if you got an option that's expiring next week. Probably going to lose, because you didn't know what day we were in on this trend, because you're learning from the wrong people, using charts that don't have nothing to do with what this stock is doing or what you're trying to do. If you're trying to make money in 10 days, there's no reason for you to be looking at a week chart or a month chart or even a 1-minute chart or a 5-minute chart. But that's what you guys do. You blend all these charts in and you don't know what to freaking do. All over the place. That's why I'll be in business forever. So, as an investment, you stick with Coinbase. Right? 200 days angled up. The best place to buy the 200 day, everybody knows this by watching any of my videos, is when it breaks under the 200. This is on sale. When the 200 is up, everything's on sale underneath it. When do I get in, Joel? What you mean? When do you get in? You obviously ain't been watching none of my videos. You get in when the 513 crosses right there. You could have got in. Joel, I'm getting in on day 5. Well, you pushing it if it's day 5. If it's day 1 or 2 or 3, see, traders that really trade and they talk to me, they already know. When they say, Joel, I just took an option on Coinbase and I'm trying to make money. I got a Friday expiration. I say, what day are you in on the trend? If they're like, huh? You probably gonna lose. I'm in on day 2. Ooh, I might take that trade with you. Joel, I'm in on day 12. Day 12? Well, hold up. Let's look at Coinbase. Let's go all the way back. Let's go all the way back for when the 200 days started to angle up. Okay? 200 days started to angle up here. How many days did this trend to the upside? 1, 2, 3, 4, 5, 6, 7, 8 days. Okay, then it went down. Then it went up for 3 days. Then it went up for about 5, maybe 10 days before it broke down, even though the 200 days angled down. Now, here's a nice little trend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Here's a 20-day trend. So that's a little bit out of the average. But anybody trying to go out 30, 40 days, y'all don't know how to trade. You can't trade with me because you don't know how to. And I sound negative because remember, I'm in the top 1%. So 99 people don't like me. Okay? 99 people don't like watching my videos because they're the ones that can't trade. If you're in the top 1 or 10%, we know to be out of this trade. The other 90%, that's why y'all lose all the time. And that's why y'all luck up a lot. Because, see, you could have got in on a 10-day trend here and you lucked up and profited. But I promise you, if you made money here, you're going to try to do it again right here. And then guess what happened? You lose. Because look at what happened after 10 days. Went back down. Oh, my God. And then look, you get another 20-day trend to the upside. So if you came to me and said, Joel, 20 plus 5, it's 25 divided by 2 is 12. I'm going to trend for 12 days. I'm going to respect you a little bit more because at least you did your homework and you went back and looked at Coinbase and said, how long does it trend to the upside when it does trend? Okay, here's 15 days. Here's about 5, 10. Here's another 13 days. So by looking at this chart, it does look like Coinbase, when it starts to run, might trend a little bit longer than average. Remember, if I took all the stocks in the world, the average is going to be about 10. That's why I use a 513 moving average. A lot of you guys might use the 5.8. You can use the 5.8 or the 513. But if you're a swing trader looking for money for the next 7 to 14 days, there's no reason why you guys should be looking at a week chart. What the heck is a week chart going to show me unless I'm buying it here? Now, this is 7 days. If I'm buying this on a week chart and I'm looking to only get out in 14 days, maybe you make money here. But these are 7-day charts. Like every single candle represents 7 days. How am I going to get the information I need for a 14-day trade and knowing what day I'm in on the trend by looking at this? This is 7 days. I'm looking at the wrong chart. I don't even know what day I'm in on my trend, which is why, yeah, you can make money if you go further out. But if you're going to trade something like this and you're trading months and you know that you're going to be in for weeks or months, then you should be looking at a week chart. So it makes a lot of sense here. If I plan on being in it for 3 months, maybe a week chart, you could use a longer time frame. All right. But I rather, stick to one chart. All right. Cool. So to answer your question, and I always do this with the first stock, I'm not going to spend this much time on every stock. But Coinbase, as you can see, it formed a triple bottom down here, upside down head and shoulders pattern, which is very bullish. We're not even at our all-time highs. So even if you were rolling with Coinbase, Coinbase used to be $429 in price. We only at 303. It doesn't mean that it can't stair step on its way up to 427. And if I was a betting man, I'm not going to get in until we get another trend to the downside, because it looks like we're going to get a little bit of movement to the downside. And then as it starts to go up in price, maybe I'll get in. Maybe it'll do something like this. Okay. And then you can get in. But yeah, this is forming a triple top. You see that head? I mean, you see this shoulder right here, a head right there. If we roll over anymore, we going all the way back down to 219. Sorry to tell y'all that, but it's still a bullish stock. So as an investor, it's still bullish. As a trade, it looks like it wants to chill for a minute. All right. Cool. That's Square. I mean, that's Coinbase. Let's look at Square. Square, guys, if you have the Cash app, you're looking at Square. Now, another reason why a lot of you guys should be buying Coinbase is its market cap was only $74 billion in size. So it has some room to grow, and its beta is about 3. So when Coinbase moves, this bad boy moves. Let's look at Square. Very first thing you need to know is this a bullish stock or a bearish stock? Well, Joel, I don't know. You do know. What direction is this angled? Up. Well, I'm gonna go buy some today, Joel, because I saw it on your video. I bought Square today. Why? What did you buy it for? All right. We know what you bought, and we know when you bought it, and we know where, and we know how, but why? Why did you buy Square? Because you talked about it in your video. Yeah, but are you buying it as a trade? Are you buying it as an investment? Is this multi-year? Is this multi-months? Is this multi-weeks? Or are you buying it as a day trade? Are you getting out of it by 4 o'clock? I don't know. I'm getting out when I make a whole bunch of money. You talked about it today, Joel. Therefore, it should go up in price. I did a statistic. Every stock that Joel talks about, it goes up in price. That's not how it works. All right. Square had about a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's been about 13 days. That means it's getting tired. It's over the 10-day trend. Can it come down for 5 days and then go up again for 10 days? Yeah, but it's rolling over a little bit for your swing traders. And this is the TTM squeeze at the bottom. When this goes red, I kind of want to stay away from it. If I'm an investor, the best place to buy these are going to be anywhere near this 200-day, or when you're breaking out, like let's say you broke the 200-day. I always teach people to buy right here when that X marks the spot. So Square, you should have been in around $60 if you were sitting on the sideline. Or let's go to August the 5th, and I should have done that with Coinbase as well. But August the 5th, y'all remember August the 5th? It's going to make y'all mad. You're going to be so PO'd. This was August the 5th, guys. And guess what it was? It was the low, $55. You could have bought it that day at the lows if you were using the what would Joe do method, the best method on the planet. Could have bought this for $55, been sitting 50% higher right now as a trade or as an investment. Well, Joe, should I get out? You said it was turning over. So I went into my portfolio and I sold everything. Why? You bought it as an investment. You up 50%. Worst case scenario, sell half. It's still bullish. As long as the trend is there, the trend is your friend until it ends. Now, the week chart. Ooh, look at what we have here. You have a 200 week this angle down. That's why you guys haven't heard me talking about Square for a very long time. The 200 week moving average started to go down June of this year. So I've stayed away from Square. But what I do love about Square is it is forming what we call a basing pattern, right? It's basing out. That means even from here all the way to here is pretty much the same price, 72. So when you sit at $72 for this long, that means it's basing out and it's probably turning around. So I would say Square looks like a buy, especially since you have Trump coming into office. Square does buy a lot of Bitcoin, and Bitcoin type companies, your MicroStrategies, your Squares, your PayPals, your Coinbase, they're probably going to go up in price because it looks like we have the first crypto president. Okay. So it looks like this is a pretty good buy. All right. But use the method on when to get in. I don't think you should be able to get in way up here. But I mean, look at where Square came from. Square used to be a $300 stock. It's what, $100 right now. Hold on. Let me pull up that chart again. Square used to be $289 in price. Uh-oh. No. Sorry. Charts are acting up. But yeah, it used to be a $200 stock. I want you guys later to take this video and watch it on YouTube, or and then make sure you watch it on a big screen like your TV. It's gonna make all of this make a lot of sense, because I know a lot of you guys are using your phone right now, and you're squinting your eyes trying to see these particular numbers. But I'm trying to make the chart as big as possible so that you guys can see it. All right, so that's Square. Let's look at Nvidia, all right, on a 200-day chart. So Nvidia, looking at the 200-day moving average. Oops, that's Square. And if you don't know what Nvidia is, do your homework. It's the largest company. I don't know if you guys know this, but Nvidia is the largest company on the planet. Well, let's see. Is it still the largest company on the planet? Let's go to this market cap. These are my stock stars. No. Oh, that's market cap. The largest company on the planet right now, why is this acting like this, is Apple. Apple overtook Nvidia. So Apple right now is 3.5 trillion. Nvidia is 3.2 trillion. All of you guys expecting Nvidia to go from $100 to $1,000 a share because it used to be $1,000 before it did its stock split. I'm here to tell you it's not happening this year or next year or even the year after that. It's too big. It's a $3 trillion company. The largest company on the planet is $3.5 trillion. In order for this stock to go from $100 to $1,300, you need $27 trillion to be invested in Nvidia. Now, this doesn't mean that you shouldn't invest in Nvidia, but Nvidia is only probably going to grow at 20 or 30% a year, probably for the next 10 or 15 years. It might double in price maybe in 2 or 3. I could be wrong, but expecting this to go to 1,000 because that's where it came from, you've been bamboozled. Stock splits are illusions. It's to fool the 99% that are ignorant to the fact that stock splits means absolutely nothing. They make it less in price to fool you into thinking that it'll go back to its original price, which it might do it, but it's not going to do it the way that it did in the last year. Just because you made 1,000% in the last year does not mean that this stock is going to 30 trillion. Dude, I don't even know if there's 30 trillion. Like $30 trillion is ridiculous. That's like all of the United States. I think that's what our deficit is, 30 something trillion dollars. All right. It's only 3 trillion now. Why would it be 30 trillion in 12 months? If that happens, this whole market is getting inflated. And not only is this going to be a company that's going to make you money, everybody's going to make money if this goes to $30 trillion. But it ain't happening, is what I'm trying to tell you guys. Nvidia has been averaging, if we were to go and look at its chart, it did grow 1,000% in the last year. But it's probably going to start acting more like a Apple or a Google, because if you pull up Apple right now and we looked at Apple's 5-year chart, you guys are going to notice something. When you look at its 5-year chart, this is probably what Nvidia is going to start doing now. 5 years ago, Apple was a $70 stock. 5 years ago. So in 5 years, it took Apple to go from $70 a share to $230 a share. Well, Nvidia is 130. So in 5 years, at the most, it might be a 300, maybe 350, maybe $400 stock, maybe. And in that particular time, Apple grew 250%. 250% means that even though Apple's a $3 trillion company now, it was probably right around 1 trillion in size. Okay. And now it's 3 trillion. So these companies are not growing like they used to be. Nvidia did grow. It grew until it caught up with the largest companies that are out there. And now it's probably going to grow at about a 20 to 30% appreciation each year. If you looked at charts, you guys would start to see this happening. So what do I think is happening right now? Looking at the chart, we know it's a bullish stock. We know the best place to buy it is going to be when it comes down to this 200-day moving average. We also know that stocks like this, when they drop, how much do they drop? A lot of you guys don't do this. When Nvidia was at its high here and it dropped way down here, it dropped about 36%. Guys, that happened this year. This year. Nvidia dropped 36% this year. And then if you were able to catch it, like maybe right there using the what would Joe do method, it gets close to the 200 days, starts to go back up in price, has an X here, blue here, you get in somewhere around 110. If you were able to get in somewhere around 110, you would be up about 20% right now. And at the highs, you would have been up about 40%. If you had bought this bad boy on August the 5th, when the VIX jumped above 50, that would have put you somewhere around here. Oh, guys, guess what? That was the low too, August the 5th. I know that's making y'all mad because you're like, Joe, I've had about 10, 15 teachers. This is the first time I heard about the VIX. And I'm pretty sure my teacher is pretty confident in what they do. Well, you need to tell your teacher to do a consultation with me or watch this video. All right. Because all teachers should be teaching this. I teach my sons this. I taught my sons this when they were 9, 10 years old. All right. Watch the volatility index. Jumped above 50. You could have bought it down here at 100. You'll be up 50% right now. Easiest freaking investment you would have ever made. Because once you see a VIX goes above 50, guys, that's the end. That's the cataclysmic nuclear bomb that we've been looking for. Think of it like a bomb. 50 is a bomb. You just blew up the country. War is over. Any downfall that the stock was having, it's over when you see that 50. You got to buy something. All right. And as you can see, Nvidia is rolling over. Doesn't mean that something's wrong with Nvidia. It just means, okay, it went up for 6 days, then it went up for 2 days. It's going to roll over for a little bit. How long is it going to roll over? Well, that's where you guys need. This is what you guys should be doing with your groups. When you guys are having your group discussions and you're talking about stocks, somebody should have a pad writing down when this stock drops in price, it drops for about 12 days or 10 days or 5 days, and then take that average so that you know that this is day 3 of this sell-off. Okay. Maybe it sells off for 3 more days before it starts to go back up in value. You also got the 200 days sitting right here at 114. That's only $20 from where we at right now. Why don't we just go ahead and drop on down there? Scare everybody out of thinking that Nvidia is not going to sell any more chips, and then let the 1%ers come back in and buy, while the other 99% think the world's coming to an end. All right. It gets down here, maybe you should buy it. All right. So Nvidia still looks bullish. All right. Cool. All right. Let's look at NVO. So that's Novo Nordisk, guys. Novo Nordisk. So if you're into the GLP-1 weight loss drugs, these are the types of companies that you should be buying. Novo Nordisk, Eli Lilly. I think they were talking about Amgen earlier. All right, so let's go ahead and look at NVO. NVO had a 513 bearish cross way up here. I think maybe I created this last time we did a video. We hit its highs. We did a 513 bearish cross. Even though the 200-day was angled up, a lot of people took advantage and bought some calls right here when it hit the 200-day moving average. If you were using the what would Joe do method, you were probably looking for a 10-day trend. You would have bought somewhere around here. Looking for a 10-day trend. 1 day, 2 days, 3, 4, 5, 6, 7, 8, 9, 10. It's starting to wear off, and then it starts to go down. Now, we didn't think it was going to continue to go down like this, but if you saw this 513 bearish cross here, you saw this one lasted about 15 days. Well, why wouldn't this last about 15 to 20 days? Now, here's what I don't like about Novo Nordisk. The 200-day is starting to angle down. So as an investor, guys, this is 50-50. Can this turn it around? Now, what some people have been telling me is that there's a 513 cross. If y'all ever wanted to see a 513 cross and you came to me and you said, Joel, I bought Novo Nordisk on day 1 after the cross, I'm going to say, great, this is how it looks. However, the 200-day is angled down. I like to see this when it's angled up. So can you take this trade? Yes, but it's 50-50. I want you guys to hawk this. I want you guys to keep an eye on this every minute, every hour, every day, because it can turn on you. And the first time it goes down in value, I want you guys to maybe get out of this, because you don't want to get caught in a 5, 10, 15, 20-day move like this. Okay. Now, what I do like is that when it does turn green, before it rolls over, it still goes a little flat for about 5 or 6 days. So maybe hold it for 3, 4, 5 days. And if it hasn't started pushing up, get out of that. You remember how I told you guys, I want you to stop staying in bad trades and spending more time in good trades? That's what our philosophy is going to be for 2025. We're no longer sitting in bad trades or bad investments. We want to be in good trades. I want to wake up opening up my 401k happy to see it. I don't want to open it up and say, "Oh God, how much am I down today? Is it going to ever turn around?" That's not how you guys should be living. It will kill you. Spend more time in winning trades. And I don't care if it feels awful, get out. You can always get back in. Guys, there's 513 crosses. Look at this. When the 200-day started to go up, look at this. Look at this. Let's say you got in here and you were like, oh my God, it's bad. You could have got right back in right here. You could have said, oh my God, I missed this one. You could have got right back in right there. You could have said, oh my God, I missed it. You could have got right back in right here. You could have got right back in right there. Now, you would have taken a little bit of loss right there. But look at this. There's always 513 10-day crosses to get you back in that trade. I don't have to If I feel bad about something, get out. And then look at this. It just kept going up. Because as long as the 200-day is angled up, it gives you the confidence to stick with that particular trade. Okay. Look at this. Look at how this bounced off the 200-day. Y'all think that happened just because? It's because the top 10% know what to look for. And I want you guys to start doing it as well. And now we're underneath it. And can this move up? Yes, this could move up to here. But if it doesn't break through it strong, then it's just going to hit it, come back down, do like this, and then it's going to start rolling over and look like this. Okay. If we hit the 200-day and we don't break through it. So if you're in it, stay in it till about 127. Sell it and then hold it. Hold those profits somewhere. And if it can break above it and get to 140 and this 200-day starts to angle back around, then you might have something there. But right now, Novo looks like it's in that inflection point where it looks like everybody wants to break up with you. So you need to either get it together and decide if you're going to do what it takes to be with me, or are we going to break up? And that's what it looks like Novo Nordisk is in. It's in an inflection point. Do I want to deal with Joel? Like, is dealing with his behavior worth being with? Because I'm going to have to do this, that, and the other. Is it worth it? If not, we can break ties until you get it together. All right. And that's how I want you guys to treat your stocks, just like you treat relationships. And it doesn't have to be relationships like I go with you. It can be business relationships, right? So that's Novo Nordisk. Let's look at Shake Shack. Shake Shack or Square. Well, we looked at Square. Long-term options calls. All right, great. This is the first options question. Now, I hear long-term, and long-term is subjective. All right, it's general. It's long-term, and I'm not going to see the answer because I haven't scrolled all the way down to the bottom. So there is, when people usually say long-term, if it's a long-term trade, it's usually more than 6 months. When a person says long-term, usually it means as an investment, which means leaps. All right. So I'm assuming that this is maybe a trade that's longer than 6 months, but we'll also look at it a little bit longer than that. So let's look at Shake Shack. So Shake Shack, guys, is we talked about it earlier. Go ahead and erase this. All right, Shake Shack, 200-day moving average is angled up. All right, 200-day moving average is angled up. So that means it's a bullish stock. All right. Now, if I wanted to trade it a little bit longer, you could switch between a week chart and a day chart. What I have noticed about Shake Shack is we're approaching a all-time high. I hate trading at the all-time highs. I like trading to the highs and maybe hold it higher. But you're never going to see Joel taking a trade into the highs. We're only $10 away from its all-time highs that it's ever been. All right. Now, you got the week chart that's angled up. That means you need to be taking calls to the upside when you see breaks in trends. So like even on this week chart, you could have just literally put this little line right here and said, as soon as it breaks this trend, Joel, I'm going to get in for a 3, 4, 5, 6 month trade. Y'all know what day this was? August the 5th. Got close to the week chart. This is when you should have been taking your 3 to 6 month trades on Shack. Should you be taking it now? Nah, you late now, in my opinion. But it doesn't mean that you can't take 10, 15, or 20-day trades. So if I was taking longer trades, I would hold off. I would hold off until we break back down. I want it to look like this. I want it to go up in price just like this, and I want it to break down into the 200-day. Once it breaks into the 200-day, and then it starts to break out and it looks like this, then I'm going to take a 6-month or a 12-month trade, but I'm not going to take it way up here. Now, would I take this for a 10-day trade? Most definitely, because this is day 2. You can say day 3, 1, 2. You're day 3 into maybe a 10-day trend. Please don't run out and buy an option for next Friday expiration just because you saw me do this. Do your due diligence. I don't know what your strategy is when you're trading. Remember, I'm not going to take trades into an all-time high. I would have taken this trade right here because we were nowhere near the all-time high. So if I was to take this trade from 110 to 138, or this 4, 5, 6, 7, 8, 9, 10, 15-day trade, it paid out. But I'm not going to take this trade when we're that close to the all-time high. So would Joel be taking a call today? No. Will I take a call if we get close to this 200-day? Yes. If we break away from the all-time highs and then we start going up and I see a 513 cross to the upside, I'll take that trade. But I'm not going to take a leap or a 6-month trade until the VIX gets above 20 or 30. And usually when the VIX is above 20 or 30, that's when you're going to see a stock like this sitting at its 200-day moving average. They usually go hand in hand. When it's at the 200-day, the volatility index is usually up. Or if it's doing its own thing and it's going against what the market is doing, see where it's at when it hits the 200-day. Make sure that week chart is angled up, and then you can take a longer trade. Now, let's just say, for example, I wanted to take a trade 6 or 12 months out. If you're using the Thinkorswim platform, you're going to be able to go over here and go to the options chain. And when you pull up Shack, let's say, what month is this? November. Let's say I wanted to go out to December, January, February, March, April. Let's just say April. What I want to do is I want to go out and I want to see if there's any unusual options activity in April. Well, I see March. So when I go to March and I pull up the March options, and let's put more strikes there. Let's put 14. If I was to go to March and I was to pull up the volume, I don't really see. Hold on, let me change this to volume and open interest. All right. It looks like we don't really have that much volume out in March, even on Shake Shack options. If I was buying 3, 4, 5 months out, I like to see over 1,000 contracts. I don't really see that. So I see 766 here at the 120 strike. But I want to go out. Maybe if I don't see any in March, I check out January. I want to see what strike price. I want to see if I can see something unusual. You don't really see anything unusual, guys, because we sitting almost at all-time highs. That's why you don't. I promise you 3, 4 months ago, when the VIX hit 50, you probably saw options contracts like crazy sitting at the 138. You see right now, I see a bunch of options activity at the 135 strike. Why? Because 138 is the all-time highs. Well, I'm sorry, 143, 138. I can't remember. So, in my opinion, I would hold off on buying some longer term options. Anything can happen, guys. Anything can happen. Some news can come out and they can say there's cannabis in their burgers and everybody starts buying their stock up. Anything can happen. But from a strategy point of view, using my method, I'll hold off a little bit, wait for it to pull back to the 200-day moving average, and then chill. All right. Let's look at Ford, long term. Ford. Now, what I do like about Ford, guys, is Ford does have a very high dividend. Now, if you didn't know how to pull up dividends, you guys should be using Yahoo Finance. That's what I'm using, Yahoo Finance. So anytime I do any of these videos, I'm going to use Yahoo Finance. I'm going to use Ask Joel GPT. So if I was to go in here and say, if I was to go to Ask Joel GPT and I put in Ford, it's going to ask me, are you planning to hold Ford for less than 12 months, I'm going to say more. And when I put more, I'm making an investment, a 1-year investment, a multi-year. Let's just go to multi-year. And it's going to pull up a lot of the information that we're looking at. All right, so remember, we're using the 200-day moving average. It didn't, ChatGPT doesn't know about the TTM squeeze yet, but it will pull up the histogram. It will pull up the 200-week simple moving average. So it's telling us that the summary here says that all indicators point to a bearish outlook for Ford using the 200-week and the 200 week moving average and the 200-day moving average, right? So that's what my ChatGPT has told you within like seconds. But let's say you wanted to know how big Ford is, right? What is Ford's market cap? Market cap is important, guys, because that's where you make your money. Well, Ford's market cap is $44 billion. Do y'all know that in 2023, it was 48 billion? 2021, it was 83 billion. Okay. So Ford, in comparison to Tesla, is small. Ford is 48 billion. Tesla is 1 trillion, if you didn't know this, right? So when I pull up Ford here, I want to look at this 5-year chart. 5-year chart looks pretty bullish. 1-year chart looks pretty bullish. But for some odd reason, ChatGPT saw negative, right? Why did it see negative? Well, Ford earlier this year was $20 a share. Not earlier this year. Back in 2021, Ford was $25 a share. It's now $11 a share. So it's dropped in value over the last 4 years. Now, its dividend right now is 5.41%. So that means if you had $10,000 invested in Ford, you're getting a nice little $541 check every single year. Well, you're getting a quarter of that every 3 months. All right, so that's nice to make $541 off of your investment, waiting on Ford to turn around in price. But let's use the what would Joel do method. Let's look and see if it's bullish by looking at its charts. So when I pull up Ford on its charts, Ford's 200-day moving average is angled what direction, guys? Down. Now look at this. ChatGPT picked that up very, very quickly. That's why I added all of these different indicators on ChatGPT, because you can go and use a regular GPT and it's going to have vague basic information that it gives you. Because somebody was like some hater was in the room talking about, Joe, what's the difference between your GPT and every other GPT? You trying to make everybody think that you created all of this AI stuff. And I'm like, did you try using a regular one versus using mine? Mine is very specific into telling and asking you, are you trading or are you investing? Is this a day trade or is this a week trade or is this a multi-year? That's what separates my GPT from everybody else's. But you're gonna always have your haters, right? That's just life. That's how you know you're doing something good. But the 200-day moving average is angled down. And I have a saying, when the 200-day is angled down, you don't want to stay around. It doesn't mean that this couldn't be a $1 trillion company one day. It's just that Joel ain't going to sit around for 10 years and wait for you to get your stuff together. I'm sorry, guys. A lot of you guys have patience. I don't. Get your stuff together, and then we'll start dating a little bit, and then maybe we can talk about something serious. But for now, you need to get it together, because you ain't got it together right now. For 4 years, you've been talking this big game, and ain't nothing happening. So I'm going to chill and do my thing and make money over here, and maybe we'll come back together at some point. But for now, Joel is going to stay away from Ford, even though you might hit the lottery next week and I might miss out. And I'm fine with that. Now, the 200-week moving average is angled up. So multi-year it's saying maybe you still want to stick with Ford, but the 200-day moving average is saying you might have some short-term pain because Ford needs a catalyst. Think about it. What does Ford have to give that's going to make the company go through the roof? It's not involved with driverless vehicles. You can't say it's electric vehicles because its electric car division is failing right now. Actually, any company that's not Tesla, unless it's a Chinese company, if you build an electric car, that division is failing right now. Cars are beautiful. Cars run great. Best deals out there right now. You guys can get some of these electric vehicles y'all been wanting to get for all these years that now you can get for 15 and 20. You can get Teslas for $20,000 now. These are the best prices, best bang for your buck right now if you want to take advantage of it. But Ford doesn't have a catalyst to make the stock go up. Like, what is it selling? Is it going to cut divisions? Is it going to? Now, if you look up one day and it says we're firing 40% of our workforce, we're shutting down our electric car division, we're concentrating more on hybrid vehicles, and we're going to put these hybrid vehicles in our best sellers so that we can get better gas consumption. It's like I need to do PR for Ford. Then you might start seeing the stock turn around because that means maybe they can start profiting. But until you hear a catalyst, Ford's probably going to keep going down in price. All right, cool. So that's how I see Ford. Oh, and I see that. Oh, no, that was it. Mina said 1 to 2 months out on Shaq. So sorry about that. If I was to go back and look at Shaq, and you said 1 to 2. You said 1 to 2 months out on Shaq. If I was a betting man and I was looking at a 200-day moving average, again, I'm not going to go 1 to 2 months out because we're sitting at the all-time highs. The all-time highs is 138. I'm not going to sit in this for 2 more months unless I'm already in it. If I'm in it, then I might chill, maybe even sell half my shares if I'm profiting. I'm not entering any positions, even though I see a 513 cross there. Again, I could be wrong and Shaq could run to $300 a share. But if you do this over and over again for every other stock, you're going to find that more than often when you're near an all-time high like that, you usually back off of it, maybe come back to the 200-day, get new people to jump into the stock before it starts to catapult up in price again. All right, so MicroStrategy. MicroStrategy, guys, is basically Bitcoin. Okay, probably the most volatile stock you can buy. It is very fun to trade, but you will lose money really, really quickly. Up 9% a day. It was down like 12% 2 days ago. MicroStrategy went up in price. And this is what I tell people also. Guys, a stock, this is a pure momentum stock. It's almost like I knew you guys were going to talk about this stock today. This stock is pure momentum. If you're talking about day trading and you just want to day trade something like MicroStrategy. Now, I did notice a pattern in MicroStrategy, and I'm going to show it to you guys. MicroStrategy, once the 200-day moving average started to go up, and I want you guys to look at this pattern. When MicroStrategy pushes to the upside, it almost always pulls back a little bit, and the time to get, now this is what's crazy. Most stocks you don't buy when they're at their highs. This is a stock that when it starts to push, that's when you get in. So check this out. You see how it pushes up real quick, then it pulls back. And then as soon as you broke above this shelf, it started to ratchet up in price again. That's how you guys should be trading MicroStrategy. You're going to see a push, you're going to see a pull, but you don't get in until it breaks above that resistance area. So watch what happens every time you do it. Right here, you would have made money for about 10 days. You see how it pushed up again? You got a 513 cross. It pushes up. It sat sideways for about 6 or 7 days. And as soon as we broke above this shelf, we ran for about 10 days. Watch, you're going to see it again. Because see, this one doesn't work because you see how it pushed? It pulled back, but it never pushed back above this shelf. It's going to push. It's going to push, go down for a while. It's going to stay green. And then as soon as it pushes above that shelf, it's going to push up for about 10 days. All right. And I kept seeing that pattern over and over again. See, pushed above the shelf, moved up in value. Pushed above that shelf, moved up in value. Once the shelves started to go from 10 days to 9 days to 8 days to 4 days to 3 days, that means, oh, well, I guess I thought it was going to get tired, but it started to ratchet up again. This is February. Pushes up again. That was 2022 when that was happening. This is 2023. Breaks above the shelf, pushes up. Breaks above the shelf, pushes up. This is 2024, guys. Breaks above this shelf, pushes up 10 days. Breaks above this shelf. This time it didn't work. This was in July. It turned around. So let's say there was one, maybe 2 losses. And then it started to push again. This is September. Pushed up, pushed above the shelf, pushed up in value. And now we're here. So what are we looking for? We're looking for a push up like this. So this is what I want you guys to look for in MicroStrategy when you trade it. You're going to see a push up. Assume you're going to miss that move. You're going to see a nice little pullback, and then a shelf is going to form. But the purest way to trade this thing is once it breaks above that shelf. Pushes up, comes down, breaks above that shelf, then it pushes up in value. This push right here was so big, this 383 to 550 was so big that people just said, I got to take profit. You might see them take profit all the way down until it starts to break up again. But when it starts to break up again, you're going to miss that move. But once it starts to go sideways and starts to gain momentum and starts to go up again, that's when you guys need to be trading MicroStrategy. So if you've been having an issue trading it, that's why. It's trading a little bit different than everybody else because it's working off of momentum. It's pushing first, then it's going sideways and then pushing higher. You're going to miss the first initial move unless you just think you can catch it. And I rather not trade that way because it don't matter. You're still going to make money. Like 383 to 550 is stupid. That's like a 50% return in like 3 days. Like that's just absolutely bonkers. 41% return. You don't get that types of moves in stocks. All right. So wait for it to come back down in price. It's going to break up, come down, and then break up again. So once you see this move, you're going to see it break up. Then you're going to see it go sideways to down, but it never gets back to these lows. It's going to break up, come down a little bit, but as soon as it breaks above this shelf, it's going to go up, down. Once it gets back to this shelf right there, you're going to make money from here to here for about 10 days. And that's how you trade MicroStrategy. It's a flag pattern. It's the most momentum stock that's out there. Momentum stocks trade off of flag patterns, not reversals. You're not going to be able to trade this using Bollinger Bands or thinking, ooh, it's down 15 or 20% today. I think this is the day to buy it. That's not how you buy That's not how you trade MicroStrategy. All right. Very good stock, but it also is going to fall in line with Bitcoin. And now it's up 8% today, which is funny because I wouldn't expect it to be up 8% today. Let's see what the options are doing. If you can afford the options are up 50%, but you need $4,000 to trade these bad boys. If you got $4,000, Here's the thing. If you got $4,000, you should have 10 grand invested in MicroStrategy, because unless you're able to buy more than one contract, there's no reason for you guys to be buying one contract and then being stuck in it. Buy two contracts. Now, if you up 50%, you can sell one contract and put the other contract at break even. And then you can ride that strategy up as long as you possibly can if you were using the what would Joe do method. But again, he's talking about a 4-month strategy. If I was trading this on a 4-month strategy, you can use the week chart. And if I was using the week chart, I literally would wait until, oh dang, I would wait until I see the momentum go green on this particular chart. So let me take all this stuff off. Oh, here we go. Let me remove all of this. And what I would do is I would use the TTM trend or use the Heikanaishi candles. And the easiest way to see when these trends happen, look, if I wanted to trade maybe 4 months out, as soon as we break this trend and we go green, I would use a 1-month chart. Soon as we break this trend and we go green, this is March. So let's say you wanted to go to April, May, June, July. You see how July, just by breaking this trend, this was green, you would have made money 4 months later. Watch this. It's going to happen again. Soon as you see that trend break, you see how you break the trend. This went green. This went green. If you guys don't have these tools, it's not going to look this easy. I know I make it look easy because I'm using easy, simple tools that you're not going to find anywhere else. I'm using the TTM trend, Heikanaishi candles, and using either the MACD histogram or using at the bottom here the TTM squeeze. Now I can go from November to, if I was to take this trade on October, November, December, January, February, look at where it was in February. It did pop up in price before it came down and popped up in price again, but you still would have made money. Same thing here. Break this trend. I would get in somewhere around here. If you had bought a May contracts, look at how high MicroStrategy is. So this is how I would trade it using the what would Joe do method. What would Joe do method is going to use the TTM trend, TTM squeeze, use a week chart. Here's another one. Would I be entering this trade today? No, because you're already 1 week, 2 weeks, 3 weeks. That's 1 month. You're 2.5 months in on a 3-month trade using the week chart. Now, if I was using any other charts, I would have been confused. That's why I think you guys should be using one chart, because it becomes so easy to understand your time frame. All right. Every single trade that we would have taken when this started to go green and this started to go green and we broke this trend, you would have made money 3 to 4 months later on MicroStrategy, as long as that week chart was angled up. It doesn't work when that week chart is angled down. All right, let's look at XOM. XOM, guys, is Exxon Mobil. Exxon Mobil should be your largest oil company that's out there. At one point, Exxon Mobil was the largest oil company on the freaking planet. Okay. XOM, using the same strategy, 3 to 4 months out. Let's erase all this stuff out. If I was buying multi-month contracts, 3, 4, 5, 6 months out, I probably want to use a week chart, wait for this to go green, wait for us to break a trend. So I would have done the same trade. I would have waited for this to break trend, this turn green. Now you can go 3, 4 months out. Same here. We break trend, this goes green. But why am I going to take a trade into all-time highs? I'm not going to take a trade at all-time highs. If all-time highs is 126, I'm not going to take a trade at 119 thinking it can go to 140. I personally don't take trades outside of the all-time highs. Now, I'll hold an investment like Nvidia and let it hit all-time highs all day long. But remember, that's investing. That's not trading. Trading is to us, but trading has a catalyst. I'm trading this because why? It's the why of trading. I'm trading this to get to this particular point and I want to make this amount of money, right? I'm trading a 3-4 month trade because I think it can go to this price. If it's above the all-time highs, I'm not taking it. If it's to the all-time highs, I would take that trade. If this is an investment, I'm going to take investments, guys, when the VIX gets over 20 or 30, that's when I'm buying my investments, or I'm buying investments when they get to the 200-day moving average, or when we start to break out of the 200-day. If the 200-day is angled down, I'm not going to invest in that company. If the 200-day starts to angle up, yes, I might miss it right here, but I'll just wait until we get close to the 200-day again, and then I'll buy my investment right here or right here when we touch the 200-day moving average. Y'all see how easy that is? All right, let me take a break and drink some water real quick. Woo! All right, cool. So that's XOM. I didn't know what time frame. So sorry about that. Shelly May said, facts. I don't know about what particular subject, but hey, that's cool. Tanika said, hey, Joel. The trading diva. Tanika's the trading diva. Y'all need to follow her. She has taught me things. Okay. You can learn from anyone. She has taught me things. Yes. An old dog can learn new tricks. All right. Terry said, what up, Joel? What's going on? Thundercat said, how do you determine how long to stay in a swing trade, rather in weeks, months, or years? Again, it depends on your charts, right? If I'm taking a swing trade, guys, can be anywhere from 1 day up to a year. So you guys got to really start defining how long is it? Am I taking a short-term swing trade, medium-term long swing trade, or a long-term swing trade? Anything after 12 months is considered an investment. So how do I determine? Well, I determine it from my charts. If I'm looking at a 5-minute chart, no, I'm sorry, you said swing trade. If I'm looking at an hour chart, I'm really only want to take maybe 10-day trades, right? So if I'm looking at the Ichimoku and I was trading something like XOM, and I wanted to take 10-day trades, once we broke above the Ichimoku and we got a 513 cross right here, I know I want to be in it. This is what, September the 30th? I want to be out of this trade within 10 days. So I shouldn't be in this trade no longer than October the 10th, right? Look at what happens right around October the 8th. Exxon starts to turn around. We broke above the Ichimoku. It was bullish. But let's say I wanted to take a swing trade that was a couple of months. Then you could either use a day chart, or I would even say maybe the week chart, because the week chart is going to show you weeks. So if I wanted to take a 3 or 4 month trade on Exxon, by looking here, I know when to get in. And remember, trades always have a catalyst. If you have a trade and you're like, Joel, I don't know when to get out, then you shouldn't be buying that particular stock. There should be a catalyst. I'm buying Exxon at $100 because I believe it can go to $120 in 3 months. Once that catalyst is done, or I want to be in Exxon in February because I know that the highest season for people to use oil is going to be sometime in June, July, and I want to capitalize on that. That's the catalyst, right? So if you get in sometime in February and you hold it until June or July because you want to capitalize on the summertime and sell it, there's the catalyst. You got your 10 or 20% return, you sell it. Or if you want to use the charts to tell you when to get in or get out, well, I want to get in this particular trade. Remember, guys, when I teach 10 candle trends, that doesn't mean 10 days. That means 10 candles. That means if you're looking at Exxon and you're using a week chart, well, if there's 7 days in a week and we're using 10 candles, that's 100 days. Well, what's 100 days divided by months? 3 months, right? So a 100-day trade is going to give me about 10 candles. I think I got that right. No, 10 candles is going to give me 70 days, right? Which is about 2 months. 2 months and 2 months and a week. So when I see about 10 candles go off, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then it still ran for about 15, then maybe I need to start getting out of it as soon as I see the first red candle. If I got a 20-day candle move and I only really wanted to be in it for about 10 candles, get out right there. The trend starts again. If I'm in a 3-month trade and I get in on the trend, even when you're doing your weeks, I always ask, okay, you're looking at a week chart. What day are you in on that trend? Day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then it starts to go down. You got about 12 to 13 candles. No matter what chart you're looking at, if I'm looking at a minute chart, there's going to be 10-minute trends. If I'm looking at a 5-minute chart, when you're thinking about 10 candles, that's why I use a 5-minute chart, because I don't like to be in trades longer than an hour. Well, 10 candle trends on a 5-minute chart is 50 minutes. That's going to give me 50 minutes of a trend, almost an hour. And then I'm out of that trade. That's why it's important that you guys use one chart, because you can't see trends or 10 candle trends if you're looking at multiple charts all the dang time. And I got to look at all these different combinations and flipping back and forth. That's why it's so hard for you guys to make money, and it's so easy for me to make money. So hopefully I was able to answer that question. Kiasha said, I think it's Kiasha or Keisha. Hello, thank you for this. No problem. I do this every now and then, giving thanks for you guys for, supporting the room, supporting us for all of these particular years, supporting me. Let's look at AMD. Oh God, AMT for a long-term investment. You would pull up AMD, Joanna. All right, AMD guys. So AMD is AMD is supposed to be the Kelly Rowland to Beyonce. All right. Although most people think Kelly Rowland is more talented, Beyonce is the one that makes all the money. So Beyonce is Nvidia. Kelly Rowland is AMD. All right. So I invested in both. I like to invest in pairs. While Nvidia has been going through the roof, AMD has been trash. Let's look at AMD on Yahoo Finance. So looking at AMD here. Now, remember, Nvidia is a $3.5 trillion company, right? So a lot of people are looking for the next Nvidia. I always tell people the next Nvidia could be AMD, or in my opinion, is Palantir or AMD. When people ask me all the time, Joel, what do you think is going to be the next Nvidia? I'm like, Salesforce is the leader in software. Nvidia is the leader in AI. You merge the two, if AI really does become what I think it's going to become, you're going to see companies like Salesforce and Nvidia grow in value. We used to think that Salesforce was, and we'll talk about Salesforce later, which is CRM, because it's software dealing, which is different from AI. And I'm not a tech guy, so I'm trying to use the right terminology. But these types of companies are going to benefit from each other. I think Salesforce even has a force, I forgot what they call it, where so Salesforce helps you build your platform, but they also help you implement AI, and it teaches you how to use your Nvidia chips. Because once you get these Nvidia chips, it's like, how do I know how to operate all of this AI stuff? Well, Salesforce says we'll help you build it on your business platform. But AMD is also a semiconductor, but AMD is only 200 billion in size. So you figure, hold up, Nvidia is $3 trillion. Joel has already told me that my stock ain't going to $1,000 a share by next year because he's just a Debbie Downer. I was thinking I was about to be rich in the next year, and he gonna come on this podcast and just shut me down. I didn't count all the money, but yeah, Nvidia has moved. It might double in value in another 2 or 3 years. So if you don't mind doubling your money in 2 or 3 years, then own Nvidia. But AMD, guys, AMD is the one that you need to be looking at. And that's why a lot of people buy SMCI. And we'll talk about that one as well. But Nvidia is $3.5 trillion in size. AMD is only 200 billion in size. Even if it was 1/3 the size of Nvidia, let's just say it had 1/3 the market share. Well, Nvidia is 3.5 trillion. That means if AMD can get to $1 trillion in size, you're gonna make 5 times your money. That's you're gonna make a good 400-500% return. That's crazy. But in the last year, guys, AMD has been in the trash. A year ago, you could have bought this stock for $116. It's only up $16. Oh, actually, it tells you right here. The stock is only up 10% in 1 year. I mean, the S&P has outperformed AMD. And that's not supposed to happen when you have an infrastructure bill that's supposed to support the semiconductor space. So what I'm thinking is going to happen, guys, is I'm thinking that all the people that have money in Nvidia, because now once they start watching podcasts like this, and we start telling y'all, guys, Nvidia literally was the largest company on the planet at some point. It ain't growing no more. It'll grow, but at about 10 to 20% a year. People are going to say, well, I want to get rich. Joel, I need my $10,000 to be worth $100,000 in the next 5 or 10 years. Well, I think maybe a company like AMD can make that happen for you. Because if this can grow to $1 trillion in market cap, that's halfway there to getting your 1,000% return. All right, so I'm thinking people are probably going to roll their money out of Nvidia and out of these companies that have been making a whole bunch of money, and they're going to start rolling it into AMD because AMD is still selling chips. If you listen to their last earnings call, they're doing extremely well. They're just not getting the love that they deserve in the marketplace, and sometimes that happens. And what I did notice on their charts, oh, dang, I pulled up the wrong thing. Oh, okay. What I did notice in their charts is that AMD's 200-day moving average is starting to angle down. And remember what I told you guys? When the 200-day is angled down, you don't want to be around. When the 200-day is angled down, you don't want to be around. Now, look at what happened the last time the 200-day angled down. It stayed down from April till about October. We might be getting a push like that. This whole move right here, when AMD hit its highs, this was 2021. It didn't start turning around, guys, until this was November 2021. This was October or November of 2022. Remember, stocks usually stay in a bear market for about a year. Remember, 344 days. So yes, the overall bear market is about 344 days, but a bear market for a stock can also, on average, last about 344 days. Well, how long has AMD been going down? Well, AMD hit its highs back in March. Now, that's a good thing because at least this is not happening close till now. So if AMD started to go down in March, well, 344 days later should be March of 2025. Well, it's November right now. So we might get, AMD might go down, guys, for November, December, January. It might go down for another 5 months before it starts to turn around. But I promise y'all, well, I don't want to promise y'all, but what I'm thinking is about to happen is once everybody gets off of this Nvidia train, let's say AMD drops to about 100. Then if it drops to about 100, it's going to lose 35% of its value. AMD right now is 200 billion in size. So 1/3 of 200 billion is 70. So 70 minus 220 is roughly about 130. AMD is going to be about $130 billion company. If it gets down to about 100, if it gets to $130, it's going to be about $100 billion company. Well, if it's $100 billion company, guys, and it runs to $1 trillion in market cap, there's your 10x that everybody's been looking for. Hopefully this all makes sense, because this is where you make money. You don't make money by looking at the share price. The share price is an illusion to fool 90% of the people that are out there. This is what you're looking at. How big can this market cap be in relation to whatever else that we're comparing this to? We got to compare AMD to Nvidia, because Nvidia is the largest. If I was doing real estate and I went into a neighborhood, I got to compare this 3-bedroom home to the largest house, or the house that sold the most in the neighborhood. Well, if the highest priced house in the neighborhood is $3.5 trillion, and I got this house over here that's 130 billion, and it's supposedly the second best semiconductor company out there, what's the better investment? In my opinion, it would be this. Would it be now? No. Would it be sometime in January or February? That's what it's looking like. But instead of me trying to time the market, what I'm going to do is wait until this starts to move back up in value. Because even though this 200-day is angled down, I don't want to get into it until it looks like this. Why do I have to wait? Let's go back and look when it turned around the first time. When it turned around the first time, guys, did I have to get in way down here at $64 a share? Nah, because that was in January. I could have waited till March, bought it at a higher price, got in somewhere around $80 a share. And then as an investment, I could have held that bad boy from $80 all the way up to $220. 80 to 220, guys, is like a 200% return. And then it started to pull back. How did people know to sell right there? Well, it hit an all-time high, 513 cross. We always revert back to the mean, which is the 200 days. So I don't care what y'all say, guys. We're always going to go back to the 200 days. So I don't care where the 200 day is. We always going to go back to it. It's either going to come up to it and we meet it, but every stock is going to always see its 200-day moving average at least once a year. All right, on average. So why not wait until we get to it? And if you get to it like we are now, you could be loading the boat right now. If you guys were buying AMD right now as an investment, I'm not going to get mad, because this is multi-year. But I'm also here to tell you that there still might be some pain for about 4 or 5 months. This might be the day it turns around. I don't know. But it's down 3% today. So in my opinion, I think it might sell off maybe until about February or March. And then when Nvidia finishes doing whatever it's going to do, that money's going to rotate in AMD. And this is where I think you guys can make a fortune. So hopefully that made a lot of sense. I know this was in the way of a little bit of that, but hopefully that made a lot of sense. So let's look at this little baby cousin SMCI. Why is everybody so interested in SMCI? Now, just like Kramer saying, a lot of y'all hate Kramer, and I don't understand why. And I know kind of what it is, know-it-alls like myself and Kramer. Kramer was born, I think, I was born February the 12th. I think he was born the 15th or 16th. So we're both Aquarians. A lot of people don't like Aquarians because we think we're know-it-alls. And we're public figures that base a lot of our success off of our statistics and our receipts. And a lot of people just don't like hearing people boast about their receipts. And I get that. You know what I'm saying? I piss a lot of people off in my own family that are like, yeah, Joel, you need to be a little bit more humble about what you do. And that's fine. But Kramer has been a very great place to educate yourself. You don't necessarily have to buy everything that he talks about, but he brings on CEOs so that you can talk to them. He talks about different stocks. He was talking about Nvidia when I was talking about Nvidia. So that should be a show that you guys should watch once or twice a week just for the educational part of it, if you can get over all the other stuff. But SMCI, the reason why I'm bringing him up is because he made a statement on his show that anytime a company says that they have any type of accounting regularities, irregularities, I think that might be the word, you need to stay away from that company. And that's what happened in Supermicro. Supermicro had I think the firm that was handling the CPA or whatever, not CPA, the attorneys that was handling their tax stuff decided basically quit on them and said, we're quitting because there's some stuff that's going on in your financials that we don't want to be a part of. Well, when you hear stuff like that, then you know that there's something illegal in the numbers. So you wait for companies like this to figure their stuff out before jumping back in. A lot of you guys are like, bump it, Joel, I want to jump in right now. But I'm going to take the same advice. You don't ever have to, you're not always late to the party. When stocks run up in value, they're going to run up for years. I don't have to sit there and wait for 2 or 3 years or try to get the best price. As long as I know that this company is only 20 billion in size. Remember, AMD is 200 billion. It's a semiconductor company. SMCI is 20 billion. Nvidia is 3 trillion. So if this company just got as big as AMD, you're going to get 10 times your money. So I understand the investment side or the trading side of this particular stock. But again, you got to understand, when you have accounting issues, I'm going to stay away until I start seeing that 200-day start that angle back up. So when I go back and I look at its charts, if I was trading something like SMCI, I'm not getting into this mug until I see something like this. So if you were trading it, let's do the counting. What do we say? Stocks usually trend for about 10 days, right? That's day 1, day 2, day 3, day 4, day 5, day 6, day 7. No way in hell Joel's going to get in on day 7 on a trend. You also have a resistance area up here. Now, you could take a quick trade. You could take a quick 3-day trade, maybe till we get to about 49. But I promise you, once we get to about 49, we probably going to break down and go back down in price. All right. As a trader, as a medium-term investor, let's say I want to look for a 3 or 4 month trade. Well, I don't see it there yet. This has not turned green yet. Once this week chart turns green and I get a green candle like this, then maybe I'll trade it to the upside. But I can wait. I don't have to sit here while all of this crap is red, because as long as it's red, it's going to keep going down. All you want to do is wait until it turns green. And I have Heikenaishi candles on here. I don't know why a lot of you guys don't use them. It really, really helps show you the trend, because the trend is your friend until it ends. Once I see that trend pop up on SMCI, then you're going to see Joel make a play at it, because I don't care if I get up in it way up here at 70. 70 to 120 is still a 50% return. I don't have to be in it way down here at 36 to 120. Because a lot of you guys might have to wait 7 or 8 months to do it. And while you sitting there waiting and your money is locked up, you missed out on the crypto trades, or you missed out on something else that was running in price. All right. While you're stuck in something, you can't play over here. Okay. I want to be playing at all times, playing the field until you marry yourself to that particular company. All right. Right now, if you want to buy it because they hit the 200-week moving average, by all means do it. But you also have to realistically say to yourself, it's still in a downtrend. I might be in this bad boy for another 10 candles. Some people say, well, Joel, it dropped for more than 10 candles. This is about the 18th candle. Well, that makes sense. So it should be popping up in price right about now. But again, I can wait, and I'm going to wait. I need a whole 7 or 14 days for this thing to be going up in price to know that Wall Street feels comfortable in buying this stock again. But I'm not getting in it until we break this little line right here. Until we break this little line right here, I don't care. I don't care about this stock. Till we break this line and go green, I don't care. It's going to stay on the sideline for me. All right, cool. Let's look at BABA. BABA is Alibaba. Alibaba is the Amazon of China. 200-week moving averages angled down. Look, Trump is president, whether you like it or not. President-elect. President-elect said we about to tariff the heck out of China, 50 to 100%. Tariffs on those particular companies means that there's a war between China and America. I don't want to be invested in any country that we are in war with, financially or physically. So I would tell people to stay away from the stock. I know you can make money here. There's 1,000 other stocks that you guys can make money off of. It doesn't have to be BABA. BABA has a 200-week moving average angle down. That alone should tell you to stay away from this company. Now, the 200-day is just started to angle up. So I get it. The last video that I did, we noticed that BABA was going up in value. And I told everybody, hey, you should be buying BABA right here. And sure enough, I made a lot of people in the room a lot of money. But now BABA is angled down. You got a 513 cross. All of this is red. All of this is red. All of this is red. No reason why you guys should be in it. I don't care how much homework you do. I don't care what politicians you talk to. Unless this thing breaks this trend line and starts to go up in value, nobody should be trading BABA to the upside. If you're stuck in this trade, then that's on you. Because it's been bearish ever since October of this year. If you were using the what would Joel do method. But if you flipping back and forth between 7 or 8 freaking charts, you're not going to know that this has definitely been bearish. I mean, how many green candles do you have here? It ain't nothing but red. So anybody that's salivating saying, "Ooh, I want to trade this to the upside," I don't know what you're looking at or who you're talking to, because this is one of the most bearish looking stocks that I've seen today. All right. Doesn't mean that it can't bounce off here, but once it bounces off here and breaks that trend, that's when Joel would take a trade at it. I know it's near the 200-day moving average. I get that. But until it breaks the trend and it is starting to turn blue on the squeeze, then you can take a shot at it. But until then, I'm going to stay away from it. All right. 200 week is angled down. If it breaks this trade, if it breaks this and goes green, I'll wait in it for about 10 days with a stop loss that's real tight. And then if it continues to go up in price, then you've made some money on something like BABA. Anthony did say long-term, Nvidia long, wider recent downturn. Is it a buying opportunity? Again, a lot of speculation is on Nvidia. And why? Because Nvidia was the largest company on the planet. We just hit an all-time highs. I'm not buying nothing at all-time highs. And the only reason why there's a downturn is because the dang stock was up 1,000% in a year. It's tax season. Think about that also, guys. It's tax season. So during tax season, if I'm managing a portfolio with billions of dollars and I need to make sure that I have this client next year that's going to continue to roll billions of dollars into my portfolio, I'm going to sell some profits, or I'm going to lock in some profits, right? Because we can't think of Nvidia like we think of it. We have to think of it like we were billionaire pension fund and hedge fund managers. At the end of the year, we have to say what our returns are, just like I showed you guys my returns. And if I want the confidence from that particular investor, I need to go ahead and sell a lot of the stuff that's in their account, get a little bit more safe. And then if I want to re-enter those trades in January or February, because we still don't know what Trump is going to do. This is still Biden's administration, even though he's a lame duck. But until Trump gets in office, you're probably going to see volatility start to spike as soon as Trump takes office, because we have no idea what's in place. So if I've already made all of this money, I could literally start fresh in January, and I don't even have to start buying in January, February, or March. I can literally wait and see what Trump's going to do by March, April, and May, and then start investing in the stock market, or reinvesting that portfolio, or reallocating those particular funds. And that's what I think the market is probably going to do. I think there's going to be a Christmas rally, and then I think there's going to be a real big fall, probably right in the beginning of the Trump administration. The market will recover once we get some confidence, because remember, we're still this is year 2 of a 4-year bull run. So we got to see what policies are going to be in place. We got to see if these tariffs are really going to be in place. And then the market will decide what particular direction to go into. But as far as Nvidia, as far as how it looks, I mean, it's way up in the stratosphere. Wait until it gets close to the 200-week moving average. Or what I always tell people to do is go back and look at history. Back in June of this year, Nvidia dropped 34%. So guess what? When this thing drops, probably going to drop 30-some%. It's probably going to put us somewhere around $100 a share. Okay. And that's what I think it can do. And it can still be bullish, even though it goes up like this, because it's easier to make a 20% return after it's dropped 30% and it goes back to its all-time highs. You see how that's a 46% return? I can get a 46% return buying Nvidia from here to here, instead of trying to hold on to it from here to here, which is a 35% drop. Where's the risk to reward? There's more risk buying Nvidia here than waiting for it to drop 30% and catching it somewhere down here. And then once it starts to move up in price, use the what would Joe do method, get in it before it hits a new all-time high. And then you can be like me, sitting in it pretty, not caring if it drops 30%. Who cares if it drops 30% when I'm up 2,000%, right? And I want you guys to take that same approach. Lots of questions on Nvidia. Thoughts on Nvidia? It appears that the market is no longer impressed with Nvidia's earnings. Should I hold, buy more, or reduce? If reduce, which up-and-coming semiconductor stock would you recommend? Well, I've already answered that question. The stocks that I would recommend would be AMD. I would recommend Broadcom. Broadcom has a really, really good relationship with Apple. I don't really like SMCI, but SMCI really, really moves. All right. I don't want you to put all your money in one basket with SMCI. Only no more than 10% of your portfolio should be in any particular semiconductor stock. All right. But these are the stocks. I do have a semiconductor watch list that I will show you guys. So if I was to go over here, go to my personal, go to my semiconductor companies. These are all of my semiconductors. If you want to see the largest to the smallest, Nvidia is the largest. Taiwan Semi is the second largest. Broadcom, guys, is the third largest. You got ASML. And then you have your AMD. Stay away from IBM. Stay away from Intel. They are old dinosaurs. All right. Qualcomm is a good one. And those are my favorite. Qualcomm, Broadcom, Taiwan Semi. But look, guys, every single one of them are down today except for SMCI. Your traders are probably trading SMCI. Your investors are selling the heck out of the regular semiconductors. All right. Great question. This is a question. I know it was about a stock we were talking about earlier. If you were to play any options, which stock, date, and target price would you choose? If I was to play any options, my go-to is going to always be the S&P 500, guys. The S&P 500 or the Nasdaq. The other, so it's always going to be an index. My second is Apple. Apple is the easiest company on the planet to trade. The reason why I like Apple and Amazon right now is because during the Christmas rally, if you don't know what the Christmas rally is, the Christmas rally is when the market pushes up in price really hard during Christmas. Well, Apple, Amazon, Google, they all make a lot. Well, Apple and Amazon make most of their money during Christmas time. Why? Because they're selling a lot of Apple iPhones, right? Amazon is doing extremely well because they're shipping, they're using Amazon products to ship those, using the boxes and using the carriers to ship all of these Christmas products and stuff to you. So Amazon and Apple have always been my favorite stocks to trade during these particular times. So in my opinion, for the next 3 or 4 months, I would trade Apple or Amazon. But I would wait for my setup. I wouldn't trade them right now. I would wait until I see a 513 cross, or I want to see it go green on the week chart. If I'm going to go out 3 or 4 months, I'll probably use that week chart. If I'm going to go 10 candles out or 10 days, I'm going to use the day chart, but I'm going to wait for that 513 cross to the upside. But that's a very good question. Oh, here's one that I don't even know about. QUBT. What the heck is QUBT? Qbert? All right. So when I don't know about, quantum computing. I heard a lot about this company. Okay. They were talking about this on on CNBC, because quantum computing is very popular with AI. So what was that ticker symbol again? QUBT. Let's check that out. Here's one that I don't know anything about. So why is everybody buying this particular company? Well, for one, the market cap is 736 million. Normally, I don't show anything that's less than $1 billion in market cap, but once it reached that $1 billion market cap, I can show it in the room as an influencer. As an influencer, I can't show penny stocks. All right, I can get in trouble with the SEC because of my influence. But it's a $736 million company, so it's right under $1 billion. So that means it can grow in value. This is where you guys make money, not the stock price. All right. I know $6 makes it look cheap, but this could have been $600 a share, and I still would have said this company has growth potential. Okay. But this company has growth potential because look at what it can do. When a company is this small, think about it. It can go to $5 billion in size and grow 5 times your money. It can grow to $7 billion and grow 10 times your money. It's easier to make a $736 million company go to $7 billion than it is to make a $3 trillion company go to $30 trillion. Because in order to make that happen, you need 23 trillion. In order to make this company grow 10 times its value, I only need 10 billion. I only need 7 billion. All right. So I want you guys to start thinking that way when you're taking these short-term investments. What is the market cap? What is the market cap? The smaller the market cap, the more money that you can make. But it doesn't necessarily mean that you're going to make that money. That's why I don't like for you guys to trade penny stocks. Penny stocks is where you go to lose money. The options market is the new penny stock space. If you want to make 50 and 100% returns and 200% returns, stop trading penny stocks. Penny stocks is what our parents were trading as options back in the day as their ticket to make money. I have not in my life met a penny stock trader that's become wealthy off of it. There's a lot of people that lie and say that they've done it, but when I say, all right, let me see your receipts, they never can produce the receipts. Stay away from penny stocks. Start trading options or learn how to trade options. But this is what I think is a decent one. When you start hearing them talk about it on social media and on TV, it doesn't mean buy it today. We need to know what day we are in on the latest trend. The latest trend that happened, guys, on the week chart, remember 10-day candle trends? When this started to go green, 4, 5, 6, 7, 8, 9, 10, that's 11 candles. That means it's probably about to start coming down in price. When we're looking at a day chart, what day are we in on this trend? Well, dang, this thing started to trend way back here. We are in day 15, 20, 20. We in day like 30 of this trend. This is when you guys buy stuff late. You're 30 days into a 10-day trend. So can you make money on this? Yeah, but look at what happens. Every time it has a big spike, people sell. Every time it has a big spike, people sell. So when you see a big spike, if you look on TV and you see it's up 25 or 30%, put it on your radar to buy, but that's not when you necessarily buy it. You probably want to wait until the way trending momentum stocks work is they form a shelf. Once it forms that shelf, remember that shelf I was showing you guys? When you break that shelf, that's when it starts to move. It goes up, comes back, breaks that shelf, then explodes in price. That's what you're waiting for. Well, this already produced a top. Guys, you're not getting back in this stock until it gets back to 9. I know that's crazy because you're like, but Joel, I'm going to miss out on it going from 6 to 9. Yeah, this kind of stock can also go from 6 back to 2. I rather get in when the momentum is happening. See, when it broke this shelf, I could have got in that day and got out the next day and been on with my life. Made my little 50% return in one day and would have been good. This is how you trade momentum stocks like Quantum. If you're looking to invest in this particular stock, I personally would wait until it pulls back a little bit. Anytime you hit a new high like this, it's going to pull back. It looks like it pulls back 50% when it pulls back. Well, it hit 9. Well, if it pulled back 50% then it's probably going to pull 50% again. So Joel would probably not buy this again until it gets to about $5 a stock. All right. These little companies like this, you got to treat them like penny stocks and options. They do move. The 200-day is angled up. So I will give the green light into buying this particular company. And because quantum computing is involved with AI, go ahead and do your homework. You know, it might be one of those stocks that you guys learn that can make you a whole bunch of money. All right, let's look at PayPal real quick. I got to go soon because remember, I got a tea time at, well, I said I'll leave at 1. So we good for now. But I got about 20 more minutes to show you guys some stock. Let's look at PayPal. Oh, my God. If y'all have not seen the new Will Ferrell commercial about PayPal, it's so hilarious with him singing in it. 200-day is angled up. I just recently started buying PayPal. I put an alert out to my ultimate members that I'm buying PayPal. I think I got in PayPal way back here. 200-day started to angle up, 513 cross. You should have been in PayPal. Even on the week chart as an investment, even though the 200-week moving average is angled down, we did get a couple. Look, this is a long trend, guys. This is 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. This is a 17-week trend to the upside. So I wouldn't be surprised if PayPal pulls back before it starts to go even higher. But we're so far away from the 200-week moving average, this bad boy might not start turning around until it gets to about 120. So if you're in it, stay with it as long as we hold this trend line. If we break this trend line, then, if you're trading it, you might want to get out of it. If you're investing in it, you need to be buying it now, 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 and now. All right. It's so far away from its all-time high. Look at the all-time high. All-time high is way up here at $310. We at 86. And now they got Will Ferrell as the spokesperson. Now, the reason why PayPal is doing well is that they have a new feature where you're able to I've been using Apple Pay. So every time I go out to pay for things, I don't like to take my credit card out and touch the little things. I like using Apple Pay. Well, now there's I don't know if it's called PayPal Pay, but now you can pay just like you do with Apple Pay. You can pay with PayPal. It's the same thing. And a lot of companies are coming out with these types of tools. I think Square is also going to come out where even though we can pay each other with the Cash App, I think soon you're going to be able to use your Cash App to also do payment features when you're at getting gas or when you're buying things. So PayPal actually has that feature too. So PayPal is a good one. All right. William said, cool. Works of Wisdom says, I'm a novice at this point, so everything seems foreign to me. I would love to learn more. Thank you for explaining the nuisances of day trading. Well, this is more swing trading, like I'm showing you. We really didn't get into day trading. The definition of day trading is 7 days or less. Anything less, if you buy something and you sell it within 7 days, that's considered day trading. Anything after 7 days is considered swing trading. So there's a little bit of day trading because remember the 7 to 10 day trends. I get it. But for the most part, 90% of the people that are probably on this call are swing traders and investors. And no problem. App loving. A lot of people love app loving. I've never bought this stock. App loving. Oh, there. All right. App loving. 200-day moving average angled up. Good Lord. It's angled up. Am I going to buy this stock at all-time highs? Hell to the nah. So if you're trying to buy it today because your friend told you how much money they made in the last 15 days, you don't know how to trade or invest. Not you personally, Mina. All right. But if you wanted to swing trade it, app loving as a call, I'm not buying it here. If I'm going to swing trade this, remember, what day are we in on this trend? The 513 cross happened way back here. This was day 1, day 2, 3, 4, 5, 6, 7, 8, 9, 10. What did I tell y'all happens after day 10? This is what happens after day 10. We go sideways to down. This started to go red. This is red. No way in hell Joel's going to buy a swing trade to the upside. I'm going to wait for it to come down in price, start to ratchet back up in price, do a 513 cross, then I will take that particular trade. Jared, this is one of my golfing buddies, said, loan me $1. Man, loan me that Jaguar you drive. Keisha said, Kiasha or Keisha, I don't know how to pronounce it, sorry. How do we use your GPT for investments? Oh, like I said earlier, when you're if you're buying something, let's say I was looking up, what's the next stock we're looking at? Qualcomm, right? Let's say I wanted to look up Qualcomm. I'm gonna go to my Chat GPT. I'm gonna put in. I can put in the ticker symbol, which is QCOM. And when I put in Qualcomm, it's gonna ask me, why is my Chat GPT not working? Hold on. QCOM. Oh, QCOM. How you pronounce Qualcomm? How you spell it? Qualcomm. Oh, it did say it. Are you planning to hold Qualcomm for more or less than 12 months. If I want to use it as an investment, I'm going to say more than 12 months. And then it's going to tell me that it's a 1-year investment or a multi-year. If I put multi-year, it's going to give me its base scenario of Qualcomm. So you're making a multi-year investment in Qualcomm. It's going to analyze it using the 200-week simple moving average, the MACD. And it's going to give you an idea of, if you love to read, if you love this type of stuff. This says all indicators point to a bullish outlook for Qualcomm. Okay. So you can get a quick kind of synopsis of, okay, using Joel's technical tools, I don't really need to pull up Qualcomm and look at it I don't have to really look at it here because you might not have your charts in front of you. So if you have your phone and you were able to pull it up, the 200-day is angled up, the 200-week is angled up. So it's telling you that this is a decent investment using the tools that I have that's out there. And you can ask questions. You can ask any question you want about that stock too as an investment. You literally can say, what is Qualcomm? What are they involved in? It'll tell you exactly what it is. You can say, from Qualcomm's last earnings report, what did you gather from it? Like, it will tell, like, guys, GPTs are, when you would do your Google search, it's like doing a Google search on steroids, and it's very quick, easy stuff. So when you want to fact check what people are saying on TV, like even during the elections, I would fact check a lot of the stuff that I would hear the politicians talking about with the Chat GPT. All right. So you guys need to use that to your advantage. So we looked at Square, we looked at PayPal, we looked at SMCI, and let's look at Pam said let's look at Qs, right? So Qs, guys, is the ETF for the NASDAQ. So if you were interested, let's say you were scared to buy all the companies. Let's say you were scared to buy MicroStrategy or Nvidia because you were afraid of it going to zero or dropping 20 or 50%, in a week. A lot of people love buying ETFs. So they'll buy ETFs like the QQQs, which is a basket of stocks. So there's 100 stocks here. So if you buy the Qs, you're literally buying Apple, Amazon, Microsoft, Google, Nvidia, AMD. You're buying all of these particular companies, and do your due diligence on the exact companies that are in there, right? So a lot of people love buying this because it's like buying the tech sector. Well, remember what I told you guys, like charts are gonna, no matter what you're looking at, the reason why my method is probably one of the best methods that are out there to determine how to trade. It doesn't matter what we're looking at, whether I'm looking at an ETF, crypto, Forex, options. It does not matter. You're going to see 10 candle trends. You're going to see a 200-day moving average, a 200-week moving average, and that's going to determine if something is bullish or bearish and when you should buy it. Well, the Qs are at all-time highs. So what is my rule about buying at all-time highs? I don't do it, but I'll buy it on a pullback. Stocks like this drop, and I even got it here for you. The last time the NASDAQ dropped, it dropped 22%. Well, it dropped 14% here, 22% here, 35% here. The NASDAQ dropped 15% here. So what is that telling me? That's telling me that when the market starts to sell off, or when tech stocks sell off, they sell off about 15 to 20%. That's where you guys should be buying it. If you're one of, you can even buy it as a swing trade. Once you see it drop about 15 or 20%, take a shot at it to the upside. But am I going to buy it after it had a 3, 6, 10-day trend here? Look at the last 10-day trend. Look at the last 15 days. The last 15 days, it took a break. Then it went up for 10 days. Then it took a break. Well, we just went up for another 10 days. So what y'all think's about to happen? Take a break. All right. This stuff is not that hard. All right. But depending on how you want to look at this as an investment, guys, the NASDAQ right now is up, I think, 28 or 30% for the year. I know this because it's less than what my account is, right? So people are like, Joel, just buy the NASDAQ, just buy the S&P. Why? I'm up 40%. The NASDAQ is up 30%. I left 10% on the table. And when you're dealing with the type of money that I'm dealing with, 10% is a lot of money to leave on the table. I'm not dealing with $100. Well, Joel, it's just $10. I'm not dealing with that type of funds, right? So 10% is a lot in the Harrison family. So I got to make sure that I can squeeze out every percent that I possibly can do by trading and by using my method to invest and trade. All right. But we got a 10-day trend to the upside. So I'm going to wait for it to go down in price and then go back up in price. And if you are taking options on this, because somebody said options on Qs, why would I take an option here? Now, first of all, rule of thumb, I don't trade to the downside when a 200-day is angled up. There's enough terrible companies out there, like literally all the airlines, all the cruise line companies, all the solar companies, that you guys can trade to the downside using the 513 cross. Why do I want to trade the best companies on the planet to the downside? I always think that those are just haters that just hate for the market to go up. So they love to trade companies like Nvidia because I didn't make any money on Nvidia, so I'm gonna short it and make money on it. Ha ha ha. Like, why short good companies? Short terrible companies and then buy these good companies. Why I got calls here. Like, yes, you can make money on the shorts. I get it. But I can make even more money shorting a terrible company. Right? When SMCI rolled over, that's where you guys should have been buying shorts, not trying to short Nvidia. Nvidia is going to give you a short-term short. Most of you guys ain't going to catch it on the 3rd or 4th day. You guys are going to try to get in on the 8th or 9th day and then lose all your money because you don't know how to trade. So unless you know how to get in when these trends happen, stay away from that. Trade easy. Keep it super simple. I'm negative there because most of y'all lose money. That's just a fact. Like the majority of you guys lose money in a market that's been going up. That should tell you something. A, you're looking at the market the wrong way. B, you're not leaning in and listening to the individuals that's telling you exactly what to do. Have y'all noticed that there's no stock that I have not told you guys to buy? Like when people say, y'all, you shouldn't buy that, Joel, because of this. You just don't know how to trade it. That's why. You shouldn't buy Bitcoin, Joel, because it's just snake. Why? If I can make money on it, then I'm going to make money on it. I know when to get in and when to get out just by using regular tools. Bitcoin trades just like everything else, guys. Like there is no asset that you can't trade. There are things I look for. Yeah, market cap is less than $1 billion. I'm not going to trade it. But once Bitcoin got above $1 billion in size, it was a reputable thing to trade and buy and sell. It's just that y'all are listening to the wrong people. You're not listening to people that are like, no, it's fine. You're not going to lose everything if you go this particular route. You're not going to lose anything if you just watch my Coinbase videos or my crypto videos and I taught you how to put your coins in a vault so it won't get stolen, right? Or you got to educate yourself. People get their money took when they're not educated. People are on platforms that are doing wrong when you don't educate yourself on it. And then you start blaming the whole space because of a couple of people that did wrong in the industry, all right? You can trade anything. I don't care what it is. Y'all see that any and everything y'all brought to me, it's the same patterns every single time. Every single solitary time. I didn't know these stocks that you guys were giving me. All right. But you guys got to start understanding that. Jerome said QBTS. What the heck is QBTS? Qbert? Y'all remember Qbert? What happened to Qbert? My kids don't know nothing about Qbert. All right. Qbert is starting. D-Wave Quantum is starting to make a move. Am I going to get in here? Heck nah. Why? Because we 15 days in. Y'all missed the move. Sorry, you missed it. But if you're in it, you can still hold it. Let's look at the week chart. The week chart is just starting to go green. We're about 6 days in. Look at what happened the last time we went up 10 candles, rolled over. Look at the last time we went up 10 candles, rolled over. Well, we 7 candles in. What y'all think's about to happen? Probably going to roll over. Doesn't mean we going to zero. It just means the stocks go up, then they come down, then they go up, then they come down, and they go up, then they come down, and they go up, then they come down. And they do that because they know that y'all ain't using charts. Y'all don't know what day trend you in. That's why y'all lose money. Okay. But we're going to change that. We're going to get educated. All right. Looks like a pretty decent stock. Sorry, I'm not spending too much time on it. It's because I got to leave in 9 minutes. I want to make sure I get to everybody's stocks. Eric said, W day for a long-term hold. What is W day? Y'all are hitting me with stuff I never heard of. Was that Workday? Oh, Workday. All right, Workday. Chart looks good. Year chart looks great. What did you say for a long-term hold? All right, for a long-term hold, what's the what would Joe do method? What would Joe do method means we want to buy it as close to the 200-week moving average as possible, or you want to try to catch it when it hits the 200-week, breaks it. So anything around 241 looks like a buy. This is when you should be buying this stock. It's about $8 or $9 higher. It's nowhere near the highs. But as a long-term investment, this looks bullish. This looks bullish. Oh, well, the 200-day is angled down. So remember, when the 200-day moving average is angled down, you don't want to stay around. So for a multi-year investment, it looks good. But for a short term, you might get about 3 or 4 months where this bad boy might stay at the same price or go down in price. Because when this 200-day starts to angle down, that means money has been coming out of this company. And because this is an average for 200 days, the average price has been falling. That's not good. Short term. That's probably why it's down 6% today. So I would stay away from this company until the 200-day starts to angle up, or we break this downtrend that's happening right now. Oh, she said, sorry. She said, how do you access the GPT? Well, first of all, you have to have a GPT subscription to all GPTs. There's a whole world there's a GPT space, right? So you go to like Chat GPT, you got to get a subscription. And then once you're in that world, it's just like being on the Oculus and being in the metaverse. Then you can access all the GPTs that are out there. Okay. And then you can access mine. All right. Tim said you stay dropping gems. Appreciate that. I'm late with this, but PBF swing. All right, cool. Let's look at PBF. Peanut butter and jelly sandwich. PBF. All right, so this is an energy company, right? We looked at Exxon, which was an energy company. We're looking at PBF. All right, PBF, 200-day is angled down. I don't want to stay around. But you can take a shot right here. But if I was swing trading it, would I get in it now? No. Why? Because the 513 cross happened there. We 12 days in. It's probably going to take a little break before it goes higher if it decides to go to this resistance. All right. That's just my opinion. Shoot, tomorrow it can shoot 34. Anything can happen. All right. But the week chart is showing you that for multi-year, you could be buying this now if you don't mind it going lower. Do I think there's a short-term trend to the upside? No, because even though the trend is breaking, the TTM squeeze did start going green, but I need to see a green candle here before I feel comfortable with buying this. So it looks like it's trying to turn around, but until it turns green, I'm going to chill for a sec. Raymond said SCI, which is Service Core. All right, so Service Core, 200-week angle up. We already at all-time highs. If you're in it, stay in it. The trend is your friend until it ends, and we're in week 5 of maybe a 10-week move to the upside. If you were taking a swing trade on this, 200-day is still angled up. I'm not going to enter any positions at the all-time highs. But if you want to do it, that's on you. But where you should have gotten into this is when this 513 cross, then you would have been able to capitalize on that 10-day move. But that 10-day move looks like it's almost over. Jerome said ACHR. And I got to leave in 4 minutes. 200-day moving averages angle down, so you don't want to stay around, even though it's making a move. This happens, guys. Every now and then, it breaks it. So it looks like the 200-day is starting to angle up, but I'm not buying it way up here on day 15 of the trend. You late. Wait till this bad boy comes back down close to the 200-day and starts to angle back up in price. But put it on your radar as something to look at. Let's look at the week chart. Look at how far it is away from its all-time highs. It looks like it's just starting to make a move. So if you're interested in something like this, multi-year, you can buy it today. If you want a better price, wait for it to break back down, because it makes moves like this all the time. You see this 15 or 20-day move before it drops. So it does that all the time. I would wait for it to come back down. It's going to make a move that looks something like this. Then it's going to come back down before it starts to shoot back up. I would be in there somewhere around here after it decides to go back down for a little while. Once people take profit, I want to see how far it could come down before it starts to ratchet back up in price. Mina says when it becomes bullish, it reaches a new resistance. Wait for the 20 to 50% pullback, then enter, trade, and put stop at support. Yeah, I think that was for MicroStrategy or any stock. Yeah, for any stock, when they jump up in price, if you're using the Fibonacci retracement tool, you can wait for that stock to either pull back 50%, or if a stock that really moves, when it drops 20 or 50%. And I do it every time. I always get to everybody's stock with about a minute to spare. All right. So for you guys that are suffering in silence, I want you guys to, for you guys that are suffering in silence, you can always go to Calendly.com. You can always go to Calendly.com/whatwithjoel2. You can book a consultation with me. All right. There are one-on-one sessions. They are confidential. I don't tell anybody about the meetings that we have. And I've met with a lot of these famous people that a lot of you guys look up to. All right. Just about everybody has come to me to get my view of the market. All right. I'm one of a kind. I know, I'm confident about that, because I'm the OG of this. I was here before just about everybody. I was here when Thinkorswim was called Invest Tools. A lot of you guys don't even know that, and I'm not even that old. So I was there in the beginning. I was there in the beginning when people were trading the 513 cross. I was there in the beginning when we started to learn about support and resistance. And I don't mean the beginning when it was first created. I mean, when this became a thing, when we became pioneers and we started managing our own funds and fired firing our money managers because they were giving us 5 and 10% returns, because all they were doing was throwing our money in an S&P. And I wanted to make 20 and I'm like, am I in Apple? Am I in Google? Am I in Bitcoin? And they're like, no, we have you in the S&P 500. And I'm like, that averages 10% a year. I can do better than that. No, you can't. Only 70, only 30% of managers can manage their money. You can't do it, Joel. And I'm like, watch me. And I've done it. And now I'm teaching you guys how to do it as well. So I'm coming to you guys from Decatur, where it's greater. I'm about to go golf. Happy Thanksgiving. Maybe I'll do one more of these before Christmas. Maybe, if I'm feeling cool enough. Watch that VIX, book these consultations, share this video, and I'm out of here. Peace.